Advocacy Sessions, Q Gahimi and Mr. Greg Foss. We're coming at you live from the Marathon Desk, hosted by Bitcoin Magazine. Gentlemen, do we want to give a bit of a recap from yesterday?
Let's break it down.
Let's break it down.
I think the biggest takeaway, and I think everyone on this panel will agree with me, is Jack Mallers' announcement. I think we are witnessing a shift in the global financial markets, and Jack Mallers is absolutely wrecking the game in the best possible way. For those of us in Bitcoin, we see and understand what just happened. For those of you at home who maybe don't quite grasp what just happened, you can now go into Walmart. You can now go into McDonald's. You can now go to Macy's, Chipotle, and pay in Bitcoin. But these companies are not going to receive Bitcoin. They're going to receive cash, no different than what a credit card company would give them, no different if you were to just hand them dirty fiat money.
And we're cutting out intermediaries, right? We're cutting out the middlemen. And that's the beautiful thing about Bitcoin. You keep it simple.
And if I could add, so I'm a small business owner in Montreal. I don't live in Montreal anymore, but I grew up there, and I'm a partner in 8 pubs. All right, and the restaurant business is tough. We're a good restaurant, and we make about a 14% EBITDA margin or cash flow margin. So for every $100 of revenue, we'll make $14. All right, and that includes all our costs and everything. But if someone takes a credit card out of their pocket to pay us, we have to pay 2.5% to the credit card company. That's called merchant fees or credit card fees. Our margin then goes from $14 down to 11.5. Right. That's meaningful, and we are not happy about that. But most people like getting points on their credit cards rather than paying cash. Okay, so we are gonna bring a Bitcoin solution to our pubs, but the bigger picture is this: there's a company that I actually invested in last year at the conference named Ibex Mercado, who has the booth right over there that has a payment system, and we're going to use them to implement our system in Canada. But what have they done? They were the guys that started in Guatemala, but went to El Salvador. As soon as Jack Mallers onboarded El Salvador last year, they're like, "Well, we're a 3-hour drive. Let's get in there." So these guys, Jose Lemus, my good friend, and his team have gone from an idea last year to the booth is amazing. All right, and they're showing these lightning payments and everything. Point is, in El Salvador, credit card merchant fees are 8%. Okay, now think about that. You're a good restaurant in El Salvador, and someone pays with a credit card, and your margin is halved. This is what Bitcoin is for. It disintermediates the intermediaries who are raping not the consumer, but the merchant that needs to accept them. And Bitcoin changes everything.
I wanted to come at it from a completely different angle from you, because I live on Bitcoin. So this hits different for me. All of a sudden, instead of using like stopgap measures, and God bless them for everybody that's built everything that's enabled me to jump through some extra hoops to be able to live on Bitcoin. But now I can earn Bitcoin directly, which is what I do. I don't use a stopgap measure for that because I just don't accept dollars. But but now I don't have to do as many hops and leaps and limbos to get through that system. I can just go and buy my groceries directly. And so while I think obviously it'll take some time for these things to roll out and be accessible to everybody, it suddenly makes the ideological person who just wants to opt out of fiat, it opens it up to them. And so the people that now want to earn and live on a Bitcoin standard because they ideologically disagree with the fiat standard and what it enables, they can now do that. They can now say, it's not a pain. It's not that much of a leap for me to say, I want to offer goods and services for Bitcoin. And then I'm just going to go ahead and I'm going to live my life. I'm going to go grab my groceries, and I don't have to break my neck trying to do it. I can just go do it. And I think that will be felt more and more in the coming years.
Yeah, can I add something though here? Look, so, I spent my life in hedge funds, and what a hedge fund implies is that you need to hedge yourself. If you're in equities, you typically are long one equity and short another. Okay, so let's pick my favorite Bitcoin hater out there, Charlie Munger. All right. Now, Charlie hates Bitcoin because he calls it rat poison. And I always say, okay, that's fine because fiat is the rat. Okay, so Bitcoin's going to crush fiat, or protect us against fiat. Why does Charlie Munger hate what's happening with Bitcoin as a payment? What are some of his biggest holdings? Oh, American Express. Fuck you. You're done. Okay? Understand. Excuse me if this is going live. I recant that statement. At the end of the day, the idea is you are in trouble if you are used to charging 8% fees, and that's your business model.
Mm-hmm.
Get on board. Sell Western Union. It's the simplest short I've ever seen in my life.
I want
All right.
to highlight something for those of you guys watching at home right now, because we have brought up two very niche examples. We brought up merchants, those who own businesses, and those who are living on Bitcoin. But frankly, that's not the vast majority of people.
Mm-hmm.
But we are talking about businesses that the vast majority of people touch. Look, Walmart is a business. They have an obligation to their shareholders to maximize profits. If all of a sudden they start to see more income off of the margins that they already have because people are not paying in credit cards, people are not giving away that 3%, all of a sudden an incentive structure starts to get created. Look at an app like Lolly. You now have incentive to go and download Lolly. You get Bitcoin cash back through whatever offering and deal that Lolly is able to create with whatever businesses that they partner with. You now have a new incentive structure created because these businesses now have 3% more, 2.5% more in their pockets.
Correct.
We're going to offer you guys 1% Bitcoin cash back. You want to pay on the rails? Tell you what, 1-2% off, or we'll give you that 3% so we can onboard more. Because for right now, the onboarding cost is worth it for us to continue to acquire new users in this incredible space. The consumers aren't going to feel this yet. That's the hard truth, but it will be soon. It'll be very soon, and pay very close attention to what comes out of both financial markets, banks, and credit card companies, because they're about to gang up on Jack Mallers and all of us here in Bitcoin.
I will cut in there for a second, Q. I think consumers are going to feel this. The touch points for the average person to Bitcoin, in America at least, have grown exponentially over the last year, 2 years. I mean, you get Bitcoin on your Cash App now, you can just walk into a store and spend it. They don't have to hold it like a stock. They can live off it if they want to. It's amazing.
I wanted to say how, again, with the example between me and Greg, I feel like it's kind of mirroring other aspects of Bitcoin's adoption in that the adoption happens in the fringes and then works its way inwards. And so what we saw in terms of Bitcoin's value proposition versus fiat in terms of storing value, where do we see it the most? We saw it, the people that were most affected by inflation, the people at the bottom that basically their currencies were destroying their ability to live. The people in the poorest areas of the world, they get it right away because their currencies are devaluing at such a rate that the volatility of Bitcoin seems like nothing. And look at the other end of the spectrum. You have the Michael Saylors of the world where they're looking and their job is to preserve capital and spending power. And so they get it right away, and then it works its way into the mainstream and the average person. And I think you as a business wanting to accept Bitcoin, you understand the margins that you're dealing with as a payment mechanism. And me as a person living on Bitcoin, you know, I'll say I'm on the fringe. You know, I'm feeling it first, but it's gonna work its way in. Like you're saying, people are gonna see those touch points and it becomes more accessible.
It's the people that, I've been saying this all week, it's the people that need to solve a problem that understand Bitcoin first. It solves several problems for several different populations worldwide. We're very financially privileged here in the United States.
Correct.
Those in other countries who are seeing 50% plus inflation need a store of value, need a medium of exchange. And this year we're seeing Bitcoin become a unit of account, an actionable, viable unit of account for people right here in the United States.
And think of, oh, sorry, Q. Go
No,
ahead.
I just want to also highlight something because I think what we have been talking about a lot is spending the Bitcoin through this guardrail and then the merchant receiving cash. But there's another component of this that is worth discussing. You don't need Bitcoin to start. You can have cash in this account, in your Strike account, in your Cash App account, and it can just go through the Lightning Network on that rail, and it's cash to cash.
Yeah.
And still there's no 3% fee.
Using the rail. So, and here, let's take the other side of it, all right? And I bring back my pubs, but then we'll move it to a country. So the pubs, like when we say we accept Bitcoin, we actually know we attract a younger market, or so a younger or a more digitally comfortable clientele, and it increases sales on the one hand, and then it reduces costs on the other hand. All right, so that's beautiful. Then let's bring it to the country. So El Salvador. Think of how many of your friends have thought about investing in El Salvador lately, whether it's going down there and actually buying property or just interested in the economy. Now, with a GDP of El Salvador, it's meaningful when you get a couple of 100,000 fairly wealthy first world people. Not saying that they're not first world, but they're less developed than the first world, interested in investing in their economy because they have a system that's progressive or whatever. So you're seeing Bukele announce that their GDP expanded at some crazy rate, right? Like, and part of it's from tourism, part of it's from GDP expansion. Part of it is from payments that don't actually have to get paid through Western Union, right? So if 20% of their remittances were charged at a 20% fee, that's a plus or minus Western Union, cheap Western Union transfer. That's 20% of 20%, it's 4%. Hey, I just saved or increased my GDP by 4% by cutting out the Western Union middleman. Short Western Union.
Can I touch on one other aspect of what Jack said yesterday? One of the more notable things to me is when he showed the video of him using it. The first example of how he was spending Lightning at that grocery store was not through Strike. It was not through Cash App. It was through Zap, which was connected to his own Lightning node with liquidity lines that he himself established through Tor. So he could have mined those coins and opened channels with them. It doesn't matter. It's a cash equivalent that has just been established. And I think one of the killer tweets from shortly thereafter was Matt Odell basically saying, hey, you've now basically created every storefront in America as a non-KYC off-ramp.
Yeah, 100%. This is the kind of infrastructure that not only drives adoption in this space, but it also, preserves innovations that we've needed and developed as Bitcoin, as a community, to help spread adoption.
And I should also
cycle.
I should also say, do we need KYC if you're going to go buy a Big Mac? You don't need all my info for that. Come on, get with the program.
You do if you are central bank digital currency and they're worried about your overweightness and say, hey, you're not allowed to spend your central bank digital currency at Big Macs.
You're over your meat quota.
It's bad for our health system, but I digress.
Yeah.
Checking in here live for those of you at home. We're at day 2 of the Bitcoin 2022 conference. This is the Marathon Desk hosted by Bitcoin Magazine. I'm Alex McShane. This is BTC Sessions, of course. This is Q Gahimi and Mr. Greg Foss. And we're here breaking down Jack Mallers' great announcement yesterday. In terms of tone, in terms of delivery, what do you think? How are we doing energy-wise at this conference today, guys? Are we going to get an eruption out of this giant volcano or what?
I mean, look, the energy here has been truly incredible. It is Bitcoin Disneyland, and we are living out in the happiest place on earth at this moment in time. Miami's been a great host. Thank you, and shout out to the mayors and all the people of the city who helped organize this. It's been incredible. Those of you guys who weren't able to make it out this year, you'll absolutely have to. Tickets for next year's Bitcoin 23 will be going live later today. Yes, I did it. I'm sorry, George, but use code YTMAG as well. But beyond that too, I am genuinely excited to see sort of some of the stuff we have cooking up today as well with the Jordan Peterson fireside chat. I don't know about you two gentlemen on either side of me of what you're excited for.
I'm excited for this first one. What's the title of the talk? But I mean, I'm
with the Jeff Ross and I don't even know. All I know is it's the Moss Ross, and there was a gross oversight that Foss wasn't included. We should have been the Oss panel, all right? And I guess I don't even get but I'll give them some shout outs. Those guys are global macro geniuses. So it's Dr. Jeff Ross, it's Jeff Booth. We can't forget about him, Preston Pish, and
Mr. Mark Moss.
Oh yeah, Mark Moss. So I'm pumped for that one too. Can I shout out my panel yesterday that I was with? I tell you what, I was on with four guys that are brilliant. I was on with I'm going to assume they're all billionaires, but I think Dan Tapiero might be trailing back a little bit from the other two. Dan, you got to get your game up, okay? But I was on with Orlando Bravo. I was on with Marcelo Clore. I was on with Ricardo Salinas, and I was on with Dan Tapiero. And guys, it was beautiful. These are billionaires who have the same principles as the normal Bitcoin community, which is one of giving, which is one of concern, which is one of enough of the privileged 1% at the top of the world taking advantage of the less privileged people with things like gross overcharging of fees on traditional credit card transactions. I was just so humbled and honored to be on stage with them. They were such good sports. I use the F word too often, but here's the funny thing. Like, I am so polite as traders go, okay? If you talk to a typical trader on a bond floor, I am really polite. So you need to understand. I apologize for my swearing. It's because I care. But as far as traders go, I'm doing okay.
Greg, you're here so you swear. I want the curse words.
I got to say, Greg, I think my favorite part of that panel was that you were so fired up you didn't sit down.
I couldn't. I was sweating like I had a towel behind the curtain, and I had to go and towel down each time.
I also like that you took a Canadian flag and you used the blunt end of it to threaten if anybody mentioned shitcoins.
It was good, you know.
I think we need you to intro every panel and then just wait off stage if you hear something off, and then go give your love taps.
These guys were good. They were good sports. It is a Bitcoin conference, and I love Bitcoin because it solves my biggest concern, which is the fiat Ponzi. And other digital assets may or may not succeed. As an aside, I think Ethereum is a test net for Bitcoin layer 3, but perhaps I digress. Anything that succeeds on Ethereum will gravitate its way towards the real blockchain, which is...
Why digress? Break that down.
But before I go there, here's the bigger thing. The fiat Ponzi is my concern. I think the fiat Ponzi is what everybody in the world needs to be concerned about. And these guys got it as well, right? And at the end, I've never watched myself in a panel or anything until this morning. I was so nervous about how I did yesterday. I had to watch the whole thing. And I just realized this morning that Ricardo Salinas actually called out one of the other guys at the end. And he goes, as you know, and I think it was to Dan Tapiero, Dan, there's only Bitcoin, you know? And here's the beautiful thing. I mean, these guys are beautiful men. They give, they get it. And so I used to work on Wall Street and Bay Street, and, you know, the world is 85% takers. You know, that's about average. On Wall Street and Bay Street, it's like 99.9% takers, all right? It's so beautiful to be in a community of givers. And these guys were giving their time. You know how much each hour of their time is worth? Like and to have them sitting on stage talking with the three of them talking like, hey, you know, what do you think of this? What do you think of this? Who orange pilled you? And it was a thing of beauty. And so I'd be happy to expand on that other subject if you want. But I'm no technological expert, all right? Look, when I have a problem with my phone, I don't fix it. I give it to my kids. Like, why isn't this working? Actually, can anyone answer why my watch runs out of power so much in Miami? It's crazy. Like in Canada, for some reason, it's a charge stays for 3 days. And I come to Miami and the effing thing is like, it's out of power in like, you know, half a day. Anyway, getting back to your point, I'm no technological expert. I would throw that to Elise Colleen. And that's her thesis. And I'm stealing it from her.
Right.
And that being said, listen to smart people and then do what they do. I'm not smart. I just tend to try and follow other really smart.
So you're talking about stable coins
No,
and
mostly
other
like this.
assets being issued backed by Lightning and
Well,
Bitcoin.
no, what I'm
ultimately.
basically saying, imagine you have some sort of app on Ethereum and smart contract that does succeed. If you are that app developer, you should find your way to the true layer 3 blockchain. It'll be the most secure, decentralized. You don't want to get rug pulled. Yeah. That's all and actually, maybe I'm paraphrasing.
So looking back today, I'm very interested in what Jordan Peterson has to say. Like we've been talking about, there's a lot of people who come into this space, enjoy the kind of thrill of having thousands of, if not millions of Bitcoiners flock to your audience base. But I'm curious to see what he's learned in this time. You know, the price action this year has not been what many people would have expected. We were getting those $200,000, $300,000 calls. Q, I'm sure. I don't know. I don't know how this year went for you. Some bullish predictions.
We're not discussing that.
I mean, end of day, it's still in play.
I want to
right?
discuss it.
Okay.
You guys should be happy that you can buy it cheaply.
Yeah.
Don't overthink this, clowns. Okay. At the end of the day, your earnings power transferred into Bitcoin at a lower Bitcoin price is what you want. Let's talk in 20 years. If you're buying Bitcoin as a get rich quick scheme, you're a knucklehead. Okay? Try and understand what this is as a store of value. And in my case, for my kids. All right. I will not spend my Bitcoin because I don't own enough of it yet. And that means I actually want the price to go down so I can buy more with worthless fiat. You get it? Pretty simple.
Look, I support that. I fully support that. I need cheap sats. I do not have nearly enough Bitcoin, nor do I think anyone in this room has nearly enough Bitcoin, so long as Saylor keeps gobbling it up every chance he gets. But to Jordan Peterson, that man is not looking at price. He is set as far as money goes. He does not need or worry about money. What is interesting to me, especially at this conference where you are seeing an intersection of technology, of finance, and culture all come together under one roof, the Bitcoin culture and community is really showing itself and coming out in full force. Jordan Peterson is a cultural icon. He is
Canadian. Canadian.
You Canadians, you keep trying
We're
to
infiltrating.
make sure you remind everyone that, hey, no, that's one of ours. That's one of ours.
Well, we don't have too many, and but we punch above our weight, right? I think we punch above our weight in the Bitcoin arena. Perhaps it's because we're sick of foolish politicians. Oh, I digress.
No, say it.
No, I can't, man. I'm already at risk of not getting back into my home country. But talking about Jordan Peterson, and what Jordan Peterson does very well is educate. This is what it's all about, is education. On that front, I mentioned yesterday, I'm part of a education platform, a free education platform to learn about the finance system that they don't teach you in school, because they're not allowed to, because it would expose the fiat Ponzi, right? And so you learn in high school that the banks are a fraud. And this is Ricardo Salinas's words. He called the fiat system a fraud as well. LookingGlassEducation.com is a free education platform I'm proud to be part of that talks about how finance really works and why every person, regardless of country of origin, needs to be concerned. You guys in the USA are extremely lucky. You live in an incredible country. There's 165 other countries that are nowhere near as lucky as you guys are. Those are the ones that need to adopt Bitcoin as much as anybody. That being said, smart people in America tend to anticipate movements and global movements. That's why Americans are buying it too, as they should. I hope Canada Central Bank actually gets their head out of their you know what and actually moves to that.
I like that Jordan Peterson came to Bitcoin because he clearly came to it because of ideological reasons, right? And whether people watching this like Jordan Peterson or not, a lot of what he talks about is what he believes are forward-looking habits that will benefit you in the long run or low time preference. And a lot of Bitcoiners also have gravitated towards more low time preference activities, and it tends to extrapolate out to other aspects of your life, right? It totally changes the way you think about things when the underlying measure of value for you as a whole changes. I think our money impacts our mannerisms and our habits much more than the average person assumes. And so when your money is driving you to make short-term decisions because it's difficult to plan long-term with regular savings, then that has an impact on what you do every single day. But I've seen Bitcoiners through and through that over the past few years have completely changed their lifestyles, have gotten healthy, have started focusing on their families and their mental health, and so much has changed for them on top of financial responsibility that it's shocking, the change I've seen in people. And Jordan Peterson comes from that angle of this is a necessary facet of society to bring us forward in a productive manner.
Right.
Beautiful.
When your ability to account for the future is compromised, your desire to plan for it wanes. I mean, Bitcoin, that's what that low time preference thing is all about. Bitcoin, Saifuddin Amus taught us this. Like, Bitcoin alleviates future uncertainty in a way that fiat cannot, because we don't know when the next universal basic income is going to hit in the form of stimulus checks. We don't know when the next $3 trillion is going to be printed, debasing everyone's time and hard work.
No, look, there's a point that we've been skirting around, but I think the fact of the matter is this: we joke in Bitcoin that Bitcoin fixes blank, and we fill in the blank with whatever the trend is, whatever our personal priorities are, and that's how Bitcoin finds you. Bitcoin truly is for everyone. We don't exaggerate it by saying that. Bitcoin is for those who want financial security. Bitcoin is for those who want financial freedom. Bitcoin is for those who want to participate in the purest form of democracy ever created. Bitcoin is for those who see a countercultural movement. It is the punk rock money.
It's for the disaffected.
Until it isn't. Okay?
Well,
Yeah.
And now I want to talk about two things that are near and dear to me. Two fabulously nice ladies, probably approaching my age, so they're not quite as young as most of the young ladies here.
29.
Beautiful, 58. But Kiki Leclerc and that's Dylan Leclerc's mom baked me a Bitcoin cookie. Like, how cool is that? All right. And then Callie Bailey, I think that's her name.
Yeah.
This is David Bailey's mom. Literally was crying with me yesterday, talking about how he helped start her family and then the whole family. We're actually giving out Bitcoin Magazine hard copies, and now it's turned into what this is. Okay, this community absolutely crushes it. I have never met people who actually care. There's guys that want to get in here and make money, and the price didn't go up. You're not for us. The price is going up. Okay, don't sweat it. Don't trade it. Understand the good that this is doing for the world. This is crazy good. It's hope.
Did Kiki give you some of the famous Leclerc family maple
Maple
syrup?
I honestly...
You need to get some.
Oh, no, hey, I'm a Quebecer, man. I grew up in Quebec. If I took Vermont maple syrup, I might get run out of town.
Yeah,
right?
that's worse than poo-pooing on the prime minister.
Yeah, man. Look, those Quebecers. Did you hear about the great maple syrup heist in Quebec? Like, it was seriously. It was like they robbed a Brinks truck, but it wasn't a Brinks truck. It was a trailer truck full of maple syrup.
Yeah. Well, to be fair, we have more reserves of maple syrup than gold at this point.
That's fair. That's actually not fair, but it is true.
Yeah.
Have you guys used any opportunities to actually spend Bitcoin, interact with any merchants here? I know Bitcoin's being accepted everywhere. At the conference.
Every Bitcoiner that has created something of value here that I wanted, I felt it worthy of my sats here.
Beautiful.
So I've tried to support every I'm much more becoming in tune, and also, like, again, I don't have dollars, so I try to basically am in the mode of it's circular economy time.
Beautiful.
And again, people look at that and they say, oh, you're spending your Bitcoin, you got to hold it forever and everything. Here, that's a great thing when you still have dollars, but the thing is, when you're on zero, get on zero, meaning zero fiat. When you get on zero fiat, it changes your spending habits and it causes you to re-examine your purchases and purchase things that you deem are worth your money. You're no longer the consumerist, like, hey, let's go to the mall for fun and just buy shit for no reason. It's no, you created something of value. I feel good giving you my sats for this. I'm going to cherish this for a long time. And so your time preference changes. The quality of product that you buy changes. And if somebody can't get you to part with your sats for their product or service, they need to make a better product or service.
100%. And there's probably no greater place on earth right now to be as a Bitcoiner than Miami, Florida, where it's meeting the coincidence of wants of 25,000 plus attendees. But every other day of the year, Bitcoin fulfills the needs of, it could be 8 billion people worldwide. Anyone can join the permissionless network. I mean, it's monetary energy itself. Why would you hold any other asset?
And IBEX is actually, my friends from El Salvador and Guatemala are actually onboarding the merchant solution here in Miami, right? And Ben, you went to the taco.
Tequiza.
Okay,
John is great, by the way. I got to give a shout out to John when I was here last time with the Human Rights Foundation and Alex Gladstein.
Okay.
He hosted a ton of Bitcoin plebs. We all went over there. He loaded us up with tacos. Graciously for free, might I add. We tipped the hell out of the staff, though.
I love it.
And of course, they're accepting Lightning, and they actually have been accepting Bitcoin since for well over a year now.
Nice.
So, a bunch of places, a bunch of companies, and everything have hosted stuff there while I've been there.
I'd love to present a question to everyone on this desk right now, and to give some background to those of you who maybe aren't as familiar with Bitcoin or Lightning and what's going on. Lightning is essentially this payment rail that we in Bitcoin have helped create and started to utilize. It allows for instant transaction verification. Otherwise, it takes 10 full minutes to verify an actual transaction on the Bitcoin blockchain. Your credit card takes more than 24 hours to validate that transaction. Your bank takes more than 24 hours to validate that transaction. However, present day, a majority of these payments are processed, as we've been talking about, through those channels. With now Jack Mallers making his announcement with further capabilities of Lightning Network, we're discussing even the way that we're spending Bitcoin here. It's going to only continue to expand and extrapolate as we go further and further out. At what point are your expectations that the Lightning Network payments that are processed total will surpass those that are processed through credit cards, just credit cards?
Ooh. That's going to take some time.
It will take a long time.
But hey, I think the beautiful thing here is that it's starting to become indecipherable between on-chain Bitcoin and Lightning. So if you're watching right now and you're like, I've never used Lightning, I don't know how to do it, go download Moon Wallet, MUUN, and it is a single unified balance you can send to and receive from either a regular Bitcoin wallet or a Lightning wallet. And the whole process is super easy. You don't have to run a node or anything like that. It just all works. If you want to know how to do it, I do have a tutorial. Just search
it's a great tutorial.
MUUN wallet BTC sessions. You'll find it. But you can get onboarded. You probably don't even need the tutorial. You can get onboarded and just start using it right away. You can send to it from a regular Bitcoin wallet if you already got some. But I was talking on my show last week with a girl named Isabella, who is doing a lot of social media for Bitcoin magazine now, and I was saying, hey, what's your favorite Lightning wallet? And the panel was answering, and she said, actually, I've never used Lightning. And then she brought up the wallet she's using, and we're like, actually, you are using Lightning. And she didn't even realize, but that's what we want. We want people saying, right. Oh, I just have a regular Bitcoin wallet, and it doesn't decipher. You're using Bitcoin because Lightning is Bitcoin.
Can I jump in, fellas? Okay, look, again, I'm old. One of the things that you need to understand is settling in 10 minutes is not the end of the world. Try to send money to New Zealand, which I did, where I sent money to an indigenous tribe in New Zealand via on-chain Bitcoin, all right? It settled in 10 minutes. If I had tried to do that at my local bank, it probably never would have settled because they wouldn't have let me send it because they would have said, no, it's got to be some money laundering organization in New Zealand. And if they had let me settle, they would have said, we're wrapping up. If now I lost my thought. Okay, screw that. I wanted to call out the Canadian truckers. All right, we used the Lightning Network in Canadian. Ben, you were huge in that. What did they do? We didn't know that GoFundMe would lock their accounts. We had this all set up before they did. It allowed the transfer of monetary energy to a cause. Whether you believed it or not, it was freedom of movement of money.
Yep, Bitcoin can circumvent governments, folks. Well, that's it for now. We'll join you. We'll be right back. We're going to go into Bitcoin and the macroeconomic landscape here.
Smash that subscribe button.
Thank you.
Good morning. Good morning, good morning, good morning. How is everybody? You awake? You awake? Let's get a round of applause. All right. Ladies and gentlemen, my name is Brandon Green. I'm Chief of Staff at BDC Inc. We are so honored to have you here, and I am so honored to announce our MC for this morning, the legendary comedian, JP Sears.
How are you beautiful orange-pilled people doing today? So you guys are the ones that didn't go out late last night. That's beautiful. Well, thank you, Brandon, for the intro. And as you mentioned, my name's JP Sears. My pronouns are stack sats. And I'm so honored to be here emceeing for the first half of the day. Thank you for having me in your community. Thank you for your patience in waiting for me to get orange pilled. It took me a while, but I'm so on board with y'all. I love you. Now, I always like to ask, I'm curious, make a little noise if you have watched some of my videos before. Oh, amazing. Wow. So I'm the guy you normally watch while you're sitting on the toilet with your pants around your ankles. You can keep your pants on today, though, while you watch me. And this is what I look like in person. I also would like to share with you sincerely from my heart, because I tend to say things without thinking them through. If I say anything that offends you today, I just want you to know I realize it's my fault how you make yourself feel based on how you perceive my words and filter them through your undealt with insecurities, which cause you to victimize yourself, which makes you feel significant as you're screaming as the loudest victim in the room and you're blaming someone else for what you are doing to yourself. That's all my fault. I just want you to know. So accordingly, if you get your fragile little feelings hurt today, you'll find some note cards under your chairs. Feel free to fill them out, leave your feedback, and send them off to who the hell cares. And we won't change anything. We have a great day in store for you. And I'm curious, if you came ready to learn and you love Bitcoin, make a little noise. Sounds like you like Bitcoin. I said make some noise if you love Bitcoin. Right on. Me too. Well, stick around. We're going to take a very brief break, and then we're going to be back with our first segment of the day, the Bitcoin macroeconomic landscape. Stick around.
Good morning. We're coming at you live from the Bitcoin 2022 conference. I'm here in Miami with BTC Sessions, Michelle Fawn, and Aubrey Strobel. We're excited today. I don't know, have you guys had a chance to move around and see what's happening on the floor today?
No, this is my first, literally, I came in and I saw this giant volcano, and I'm here.
That's all
I
you need
showed
to
up,
see.
I
Easy
pulled
to
up.
find, I guess. Yeah.
Yeah, I think we're like the only people not hungover. I don't know. Maybe not.
I'm doing okay
At
this
this
morning.
conference.
Yeah.
They're trickling in. They're trickling in slowly
Bitcoiners
today, but
party
we're gonna
hard.
build. Yeah,
They party
Bitcoiners go
hard.
hard.
They
Yeah.
do. They do.
Yeah. So, what speakers are you excited to see today?
I'm honestly excited to be here.
To
with
be
all of you.
here,
Yes, to be here.
to see yourself, to see us.
No, to see you. To see all of
No,
you.
if
Really
I'm
looking forward.
actually interested in the energy panel if that's still happening. I know there was some reshuffling.
Yeah.
So
You are the carbon they want to reduce.
Yeah.
Is the title,
Yes.
right?
Is that still happening?
Yeah, and
Perfect.
that's much needed. We got to bust that FUD, guys. We're under attack from mainstream media.
Yep.
Bitcoin is under attack.
Mhm.
This is
Yeah, I
what do you-
literally did a video on this with Hello Bitcoin
Mhm.
a while back. I think I shared it with you as well. And it went pretty viral. Just talking about basically going after Elizabeth Warren. I did ratio her one time on Twitter, I think which is one of my like weirdly prized moments. But
I think that's a rite of passage.
I know it
If you
is.
can ratio Elizabeth, then you're doing okay.
Yeah, no, it was great. It's one of my best tweets, but my great work. But yeah, I created an energy video probably a few months ago, just trying to demystify a lot of it because there's with that, the media basically puts out the narrative that they have, and there's really no one to combat crisis comms for Bitcoin.
Mhm.
And so I actually gave a talk on this at the other conference, 2 days ago, just talking about how we have to sort of mobilize as like a group to combat the.
We
Yeah,
have to
Bitcoin
dispel the
has no-
misinformation. There's
Yeah.
so much
Yeah, yeah.
misinformation about like the mining, the energy, and I know there's so many people who are very conscious and they care about the environment, which I think is beautiful. But
I will say focus on, the signal. They're lending legitimacy by interest by virtue of their attacks.
Yeah.
They have to face this somehow. So what do? They lie, they misinterpret, they tweak, they tell you that there's
Yeah.
a cost of energy per transaction.
I can't believe that's still a thing.
That's
Like,
so bad.
like
yeah,
that, it
by
scales
now
linearly.
it's like really that's so old. It's like
Yeah.
you don't have anything new to talk about.
Yeah, well, that's the thing. If you're in Bitcoin long enough, it's like a rolling circle. It's a never-ending circle. I
Yeah.
think Nick Carter said with the FUD dice that FUD is neither created nor destroyed. It's just whatever. If one side of the FUD dice is facing down,
Yeah.
another side is facing up. So it always comes back. And if you've been around long enough, you're like, per transaction energy. Are you serious? I heard this like 4 years ago.
Yeah, yeah. They just need something new to talk about.
Yeah.
It's like by now it's like
But they
come
don't
on.
have any.
I know, I know.
Yeah, we're switching here to politicians today. We've got Cynthia Lummis coming.
Yes.
Love
You guys
her.
been following
Love
Cynthia
her.
Lummis?
Yeah.
Mm.
Yeah, it's just amazing to see politicians come out and take a stance now
Mhm.
and just be very pro Bitcoin. That's something we didn't see. I mean, if you have been in Bitcoin
Yeah.
for a while,
Yeah.
it's something that no politicians were even touching.
Yeah.
Yeah.
And now you see it regularly on commentary and shows.
I'm very excited because I'm down from Canada, and not a fan of Justin Trudeau, but we have a guy who has the ear of some great Bitcoiners like Greg Foss and Jeff Booth. His name is Pierre Polyev,
Yeah.
and he
Mhm.
is. I always knew he was in that Bitcoin closet, but he just kicked that damn door open recently, and he is coming out full steam. And he specifies too, like people have been like, "What do you think of crypto?" He's like, "I support Bitcoin," and he's going out, and he was at Tahini's in Toronto the other day, and he bought shawarma with Bitcoin via Lightning.
Wow.
And this is part of his
Love that.
platform of freedom of payments, freedom of choice of money.
The
And I
market
think it's fantastic.
Yeah, the market should be open to everyone in the world on the
Yeah.
planet.
Well, we're here,
Absolutely.
guys, kicking off day three of the conference.
day
Yeah,
three.
I'm gonna have to buy some coffee with Lightning here. We gotta get the energy up in
I
this
do- I need
room
some
as
coffee.
people
I do.
trickle in. Yeah, looking forward. Up next, it looks like we have Bitcoin and the macroeconomic landscape. That's gonna be Preston Pish, Jeff Ross, Mark Moss, and Jeff Booth, I believe.
Nice.
Yeah. All right. Looking forward to that as well. Yeah, guys.
Yeah.
We've got a giant volcano. We've got
Thanks, Cash App.
every
Yeah,
we've
shout out
got
to Cash App.
every Bitcoin merchant in the world pretty much setting up a booth here.
What happened to
So
this
the-
volcano after the conference?
We
Did-
keep it.
you just
We-
keep
Are you
yeah,
serious?
Somebody's
yeah.
gonna live in it.
We
Yeah.
take
Yeah.
our
There's a
part-
room in
I
it.
mean,
There's a
you could.
room in there.
Are
we
you
take we
serious?
take our meetings in there.
Let's go. I
Yeah.
love that.
That's where Bukele's hiding. He didn't come to the conference.
He did come. He's just-
he did come. Yeah, he's scared.
Oh my gosh.
All right. It sounds like we made it.
You beautiful people. Are you guys ready to get the show rolling? Cool, because we're going to get rolling whether you like it or not. Our first segment of the day is a great one. It's the Bitcoin macroeconomic landscape. And I'd like to introduce our panelists. First, His Holiness, Mr. Mark Moss. And next, Mr. Jeff Ross. And we're sticking with the Jeffs with Mr. Jeff Booth. And Mr. Preston Pish. And your moderator for the panel, Mr. Trey Lockerbie, ladies and gentlemen.
All right. Good to be back, Miami. How we doing? How we doing? I know it's early, but how we doing? Yeah. All right. I'm trying to get you ready because we got some heat to bring for you this morning, all right? And I don't think this room in particular has had an event this electric since about 1964 when a young 22-year-old man named Cassius Clay, later to become Muhammad Ali, was up against the heavyweight champ at the time, Sonny Liston. And Cassius said he's going to float like a butterfly, sting like a bee, and knock Sonny out in the 8th round. And what happened? He knocked him out in the 7th round. And I'm honored to be on this stage with, I think, the biggest heavyweights in the Bitcoin space. And I'm excited to get this started. Are you guys ready? All right. So we're going to start with a little bit of micro and then work our way up. So I'm going to start here with Dr. Jeff. And we're going to talk a little bit about the recent price action of Bitcoin. Bitcoin has been trading with a 0.9 correlation with the NASDAQ recently, and I'm wondering, why do you think Bitcoin is trading like a tech stock, and what needs to happen for it to decouple?
Yeah, that's an important question. So I guess what I would say is that, you know, we have 25,000 people or more at this conference. That's fantastic, but we do not yet make the market for Bitcoin, right? So we understand that Bitcoin is the world's best safe haven asset. It's so much better as a safe haven asset than the US dollar, but the majority of market participants still don't believe that, right? They still think when they get scared, when the economy is tanking, they sell all of their risk assets, their risk-on assets, and they move to cash. So over time, we as Bitcoiners understand that Bitcoin truly is the safe haven asset that we should be flocking to. Now, if I can digress just slightly, I'm very bearish on the US economy right now, you guys. Like, things stink out there right now. The economy peaked in Q4 of 2021, and we are decelerating. Inflation is really miserably high, but I also think that it's close to peaking right now, and we start to decelerate. When you get that combination of factors, that is terrible for risk-on assets. We are getting closer and closer to a recession. The Federal Reserve, for their part, they caused all this, but now they're trying to slow the economy down. They want to see a major slowdown. They want to see things slow down because they're trying to tame inflation. So expect to see things like equities, like real estate, like even commodities, which had spiked so high, oil, lumber, whatever, you name it. They're coming down now. We're going to see repricing in lots of these asset classes, and it's going to be a tough year. So Bitcoin, getting back to the original question, is highly correlated right now with the NASDAQ. It has about a 90% correlation, meaning that if the NASDAQ moves up, Bitcoin moves up. If NASDAQ moves down, Bitcoin moves down. It won't always be the case, but it is for now. So I would caution people to get mentally ready for what could happen. If you are a long-term investor in Bitcoin, and I truly hope 99% of you are, don't trade Bitcoin. Bitcoin is not for trading. It is the world's ultimate savings technology. It's meant for savings. So think of it like you think your bank account. You don't trade your checking account, right? Thank you. And I mean this sincerely. People ask me all the time my price predictions. It does not matter what the short-term price predictions of Bitcoin are. Quit checking your phone. Treat it like it's your savings account, right? You don't trade your savings account. So think of it that way. We are going to have an awesome year of stacking sats. We're going to get more sats for the US dollar or whatever garbage government fiat currency you have. Take advantage of it this year, because in 2, 3, 5, 10 years from now, you are going to be absolutely ecstatic that you did that. It's going to be awesome for you and for your family and for future generations. And I'll stop there.
All right. Sticking on price action a little bit, we're going to move over to bonds. So Preston, the yield curve recently inverted due to massive sell-offs in bonds. What is happening with the bonds today?
So this is my favorite topic. At a basic level, when you're performing economic calculation, you always start with what's your inflation rate. And you construct everything above that, because that's where your risk-free rates are constructed as a premium above that. And then your equity premiums are a premium above those fixed income rates. And so when you think about like the hallmark and the keystone of economic calculation, it's what's the inflation print. And I think if you have people that are looking at it from a recency bias, they know the global events that are happening with Ukraine and Russia, and they're saying, oh, well, that's the reason why we've got an 8% and maybe higher inflation print. But the fact of the matter is we've had over 5% inflation for a year leading up to those events. And what's causing that? Well, the thing that's causing it is a breakdown in supply chains. And so when you go from an environment where you had inflation prints at 2% or less, and all your fixed income bonds were getting priced at a 1% premium or a 0.5% premium above that inflation rate of 2%, you can see why we're in for just an incredible shock to the global economy when you have an inflation print of 8% and all these fixed income yields are still down at 2 for a negative 6%, probably higher than that. I can only imagine what the next CPI print's going to be. And so when you're re-engineering all that financial valuation for everything on the planet, I mean everything, we're talking hundreds of trillions of dollars, you have the biggest negative spread that anybody in this room has ever seen in their lifetimes. And they need to treat that with a whole lot of caution and thought, because boy, oh boy, when you adjust discount rates like that, the prices on everything are going to go like that. And so what does that lead to? That leads to further printing, further manipulation. Central banks have to step in. They're going to have to hold back that sell-off in fixed income as those yields are blowing out in a sell-off. And that's just, boy, oh boy, from my vantage point as I'm looking at the macro landscape, I mean, that's the story of stories. That's the elephant in the room, is this negative spread is just unprecedented.
All right, and persevering. And that's just the CPI. That's not
Yeah, exactly. That's the CPI they're telling you.
That's the CPI they're telling us. All right, Mark Moss, talk to us about the 3 macro cycles in play and how they are converging.
Yeah, that's something I've spent a lot of time thinking about. You know, we tend to look for financial indicators, and we're looking at indicators to try to kind of guess where things are going in the future. The problem with indicators is there's no one indicator that's conclusive, and so we're looking for multiple indicators that can tell us different things. And really, in the stage that we're at right now, in this global stage, we need to look at indicators across a spectrum. And so we can look at just financial indicators, but there's other things at play. So for example, there's the political, social, cultural things that we're looking at. And so there's cycles that happen really on about a 250-year time frame. We see that we go from like a centralization to a decentralization cycle. We get too much government overreach, too much centralization, and then people push back. They reject that. And then on a different time frame, we have this 80-year financial cycle, this financial revolution cycle, which we're kind of talking about. We're at the end of this long-term debt cycle. And so about every 80 years, we see this, and then the government prints too much money, inflation runs too hot, people don't want to hold the money, they want to rush back to a commodity type of money. And so that's what we're starting to see exactly right now. But the biggest driver, the thing that changes humanity, changes history through thousands and thousands of years, is always technology. And this is the big piece that a lot of people miss. So some of the people that I look up to, like Ray Dalio, for example, that's charted this long-term debt cycle. He's just recently wrote a new book that's great. Everyone should read it. The research is amazing. But he's missing, I think, one of the biggest ingredients, which is the technology itself. And technological revolutions happen on approximately a 50-year time frame. And so what's interesting, if we look at political 250 years, financial 80 years, technology 50 years, we have all three of those converging right now at the exact same time. And so while we want to look at these systems, we want to look at these financial revolutions or this financial reset that we're going through. That's what they're calling for, this financial reset. We can't just look at that alone. We have to look at the technology, which of course is why we're all here. We're witnessing a technological revolution, a decentralized revolution. Of course, Bitcoin is doing that. And so while we have all these problems with the bond markets, and we'll get into some other things about how the world can kind of move forward in this globalist system, we can't ignore the technology. We have to look at Bitcoin. And so while we're bearish on the economy, like Dr. Jeff Ross says, and I agree with that, and obviously Preston highlighted very well the problems we have with the bond market, we also have to look at that we do have this new technology, and that's going to start changing things at the same time. And what a time to be alive.
Mm-hmm. Mark, you mentioned Ray Dalio's book, so I want to stick on that for a minute. In the book, there's this archetypal bell curve of the rise and fall of a superpower, and there's 18 different steps involved as he's mapped out. Number 14 is money printing. Number 15 is internal conflict. And so, Jeff, I want to talk to you about internal conflict. Right now, there's a wealth gap where 0.1% of the country here in the US has as much wealth as the bottom 90%. And internal conflict most commonly revolves around wealth gaps. So my question for you is, what would be the best step to avoid an internal conflict like that arising?
Well, the simple answer is this. Everybody's in the room for the same thing. A transitionary system away from the system we live in. And we measure everything from the system we live in, so it's hard to see what's happening from that system that is bound to get worse. If you backtrack what it looked like 20 years ago when everything felt okay at 2% inflation, then things started to happen at an increasing rate, and now you start to look around the world and you wonder, what the hell is going on? And the system has to do this. And I think this is one of the things Ray Dalio misses. These long-term debt cycles, and I'll just add to what Mark was saying, technology has always been the driver. Technology has always been the driver, but we had hard money based on gold. And then on hard money based on gold, you had to build a credit-based system on top to drive velocity of money. And that credit-based system on top, driving velocity of money, is subject to whims of us, human beings, greed and arrogance and thinking we can outrun the free market. And when you do that, you turn into these long-term debt cycles because you have to keep growing or you have a credit collapse. And that keep growing turns into growth by manipulation. And that's what's happening today. And so a feature of the system is a transfer of wealth from the middle class and poor to the rich, because it's based on inflation, which is really just a transfer of wealth. It's not the free market working. The free market is deflationary. The free market has always been run by technology, and it's deflationary. And why these long-term debt cycles, if you go back to the Roman times, they reset every 600 years, is because technology wasn't moving as fast. And now technology is moving, and then you reset these every 200 years, then you reset them every 100 years, now you're resetting them every 50 years. Remember, the US dollar failed in 1971, and then you created the petrodollar system, and it's failing again right now. Because the entire system is based on trust, and when you abuse trust, it destroys, and it pits people against each other all over the world, and we miss what caused it all. This is one of the things that Ray Dalio misses, and many people even in the Bitcoin space miss too. Because they're looking backwards at what used to happen on these long-term debt cycles, they're missing what's happening with technology. The technology of Bitcoin allows you to build a system peer-to-peer that doesn't require debt for velocity of money. And what I just said is probably the most important thing about Bitcoin, because you don't have to trust human beings and centralization that will always, because our human nature demands it. We wouldn't vote for somebody who said, hey, tomorrow we're going to make the whole thing collapse. Because if the US government doesn't come in with yield curve control and massive printing, everything resets to zero all over the world. And the only money, you think the money in your bank is safe? It's not safe too, because that resets too. The only money that is actually valuable is the stuff under your mattress. And I'm sure nobody in this room wants that to happen. And so what ends up happening is you have to have a transitionary system. And Bitcoin is the only transitionary system plausible to be able to take us to the other side.
If I could add something onto that. So talking about the technology and then being able to speed up the velocity of money, I saw Peter Thiel talking yesterday, and he was showing the size of the gold market, and then he's showing the size of the equities markets, and then he was talking about Ethereum, and he said, like, Bitcoin is good for long-term store of value, but Ethereum might be better for velocity. And it's this old world thinking where gold was slow, and so maybe we need something like silver to be faster, or maybe we need to put a paper on top of it to be faster. But because of the technological revolution that we have it all built into one. So we have the savings technology, we have the velocity for the medium of exchange at the same time. And so I think by trying to break apart these different asset groups and say, well, we need different assets for these, again, it's a technological revolution where we have it all together. And I think that's a big piece.
All right,
I would just, one other thing, when Jeff said the term plausible, I immediately thought decentralized, right? Like, that's the part that really kind of separates Bitcoin, because although it might appear like a lot of these other coins and things like that are decentralized, I think a lot of it's just the name alone, because when you really pull back what makes these things decentralized, it's the power to run your own node.
Yep.
It's the power to enforce that protocol at a cost that is next to nothing. But here's what's important. It's next to nothing 10 years from now, 20 years from now, not just today.
Right.
Exactly.
Right? And that's the part that I think so few really kind of latch onto when they ask whether something's decentralized or not, is it decentralized 20 years from now? And if the answer is no, I'm sorry, I don't see a world where that's going to be the foundation of the future of finance.
Mm-hmm. Yep.
Yep.
Dr. Jeff. Japan has been able to avoid hyperinflation because they are a massive exporter and have a global economy to work with. But BlackRock CEO Larry Fink recently said that the war in Ukraine is the beginning of the end of globalization. So what happens to countries like Japan and their currencies if we start to deglobalize?
What happens? What happens to all fiat currencies over time? They go down to zero, right? If they can't export their inflation onto other countries, as they have been doing, and this is true for any country, they have to deal with it themselves. The nature of government fiat currency is that it can be printed infinitely, right? You guys all know math. Hat tip to Greg Foss, who's listening to this right now.
Just math.
Right, it's just math, 11th grade math. If you can print something to infinity, the value of each individual unit goes down to zero over time. That's just math, it's guaranteed. This is what's gonna happen to the Japanese yen. It's going to happen to the euro. First, it's gonna happen to about 100 other currencies that are much smaller and weaker. They are going to zero, you guys, and people are going to understand the need and the importance of Bitcoin. They're going to start flocking into Bitcoin because they need to preserve their purchasing power. People are starting to get desperate for some sort of alternative. to preserve their purchasing power, right? Bitcoin, because it's perfectly scarce mathematically, as long as there is continued adoption of Bitcoin, which of course there will be, because it's just simply better money. The value over time approaches infinity. That's just what it does. That's what we will experience throughout our lifetime. I'm not saying it's going to infinity, right? Infinity is a concept, not a number, but it will continue to go up. Michael Saylor is right. It's going to go up forever, Laura. Okay? So understand that. Thank you.
Well, and the reason why it goes
Well, hang on a second. I got to go to Jeff Booth here because there is something about the current macro picture that so many people miss, but what do you think should be the obvious thing we should focus on?
Peter Thiel yesterday talked about ESG. And that it's a conspiracy around money printing. And I'm not going to talk on a specific conspiracy theory, but what I'd rather talk about is I'm involved in, I'm an investor in maybe hundreds of different early stage technology companies in the greening space. And what I can tell you is every one of them, I wouldn't be an investor unless they delivered value to society that reduced cost a staggering amount. And so when I see these things that make our entire world better and are showing up, and by the way, the ones that don't work don't reach an economic calculation to provide value because then nobody uses it. It should be pretty obvious. And so all of these technologies that are coming, not here yet, not widely distributed yet, in food abundance, in energy abundance, that are coming, that all lower prices, how the hell do you let that happen? The only way that happens, you have to obfuscate that money by printing more money, and that printing more money to pretend we live in a growth cycle forever is the cause of all of the problems. So what you get from that is you realize ESG is unsolvable without Bitcoin. It is just it's unsolvable from the current system. Bitcoin is the only way to solve ESG. And I asked this question to Bill Gates. I asked this question to Al Gore. I asked this question on Twitter over a year and a half ago. 1 million views, not one plausible answer. And that tells you something. There is no answer from the existing system. So when you hear ESG, connect it to Bitcoin as the only way to solve that problem.
All right, we're going to do our knockout round, okay? So we're going around for the knockout here. I'm going to start with Mark. So on February 26th of this year, Mark, we cut Russia off from the SWIFT system, thus eroding trust around the world. How do we move forward in a world without trust?
That's the question. So trust is one of the most important ingredients, the most important ingredient. We have to have trust as a society. The thing with trust is that, trust can be eroded, and we've seen that happening all across the world. There's been polls that have been showing how far trust has been falling. But then at some point, you find that piece of information and trust is just killed. And I think we saw that all around the world. We see, money being inflated away, people losing their money. Obviously, Canada brought that front and center. We just saw very quickly that even if you donated a little bit of money to something that was perfectly legal at the time, you might be kicked out of the financial system. And it put the world on notice, like, oh, that money in my bank isn't really my money. We lost trust. There started to be a run on the Canadian banks. But then, to the point that you brought up, Trey, I believe trust finally got killed, right? It got assassinated on that day because there's 3 global superpowers in the world that have nuclear weapons. The rest of the nations are tier 2. And so if Russia, one of the superpowers with nukes, could have their bank accounts frozen, stolen, whatever you want to call that, what chance do other nations have? And of course, the answer is none. And so each nation now has to ask themselves, can I trust my savings in the banking system? The answer, of course, is no. And so then what's next? Well, I can hold gold, but I have to hold gold in my own safe because the UK just seized $2 billion worth of gold from Venezuela. If it's not in their own safe, not your keys, not your coin. And so all of a sudden we have this situation where trust has been killed. Nations can't trust each other. People can't trust the nations. And we're at this junction right now where I don't see how the world moves forward without trust. We get stuck in this situation where I can keep my gold in my own country. How do I verify it's real? China, of course, faked that they had real gold. It wasn't real gold. And then we end up in this like drug dealer movie scenario where it's like, give me the cash, no, give me, and that doesn't work. It doesn't work in a global environment. And it's almost like we might need a decentralized ledger that nobody could control if we could ever come up with something like that.
All right, rapid fire. Jeff, what are your closing thoughts?
Closing thoughts?
Closing
oh,
thoughts.
man. Oh, man. You guys.
10 seconds.
Okay. Bank, checking, and savings account are where your money goes to die. Bonds, thank you. Bonds are return-free risk. We have a chance now to exchange our dollars for the greatest sound money, the greatest savings technology that has ever existed. Please, please, please don't trade Bitcoin. Buy, hold, never sell, and you will do well, I promise.
Never.
Never.
All right.
We don't want more money. We want what we think more money will buy us. Money is an abstract concept for our time, meaning if you destroy the key aspect of money, if you manipulate the key aspect of money, you manipulate all of our time. And when you have manipulation in money, you must have misinformation everywhere in society. So the thing that everybody's looking through, news, is this thing is going to get worse and worse and worse. The existing system is going to get worse and worse and worse, is that misinformation. And you want to bite at the misinformation. Ukraine war, all of these things, you want to bite because it's so polarizing. COVID, and it sucks you in. Bitcoin is the opposite system. Hope, truth, better future. Spend time there. Forget this system's going to die anyways.
Preston, closing thoughts.
Buy Bitcoin and fall asleep for 5 years.
There you have it, folks. Our macro panel for the day. Hope you enjoyed it. Thank you very much.
Welcome back to the Bitcoin 2022 conference. I'm here at the Marathon News Desk, hosted by Bitcoin Magazine. If you're tuning in from YouTube, youtube.com/Bitcoin Magazine, please hit that like and subscribe button for that amazing Bitcoin and the macroeconomics landscape panel that we just heard.
Yeah.
Mega panel.
Yeah.
Greg Foss. Initial reactions. I know you're dying to comment. on
You know
this.
what? I mean, look, I love those guys. We speak the same language. We've managed risk as a career. Jeff Ross is, thank you for calling me out, by the way. He said it's just grade 11 math. Let's be honest. It's a little bit more than grade 11 math, but not much more. I want to hit on something that Preston said. Because I traded bonds, as probably everyone knows, but I have to be bingo Bitcoiner and say it again. So put that bingo square down when I say I've managed bonds for 30 years. Bonds are a horrible investment. Bonds are hitting new price lows today. But the price lows they're hitting only corresponds to a yield in the US 10-year of 2.71%. Preston mentioned that reported CPI is 8%. It was 7.9%. That means that you are earning a negative real return of 5% on your bonds. Sounds like a great investment, Ray Dalio. But at the end of the day, what I would say is the repricing in the bond market is continuing today. And there's a chance if the US 10-year bond does go to 5.5%, you will lose another 25% on the price of your bond portfolio. This last quarter is the first quarter in history that the US long bond was down more than 5%, and equities were also down 5%. There is no risk balancer left. Because traditionally, when equities went down, the flight to safety meant bond prices went up and yields went down. But since global yields have gone down to the US 10-year was under 1%, there was no more ability for yields to go down. People would have said negative returns. Those people had the glue bag on, okay? At the end of the day, a negative return in bonds means it's not an asset, it becomes a liability. You give somebody their money, you get less money back. Sounds like a great investment? Europeans are morons, okay? Europeans are fucking morons. But God bless Europe, okay? But sorry, before I forget, I don't mean that. I only mean it because that was their central bank policy to bring it to that level, okay? Here's what I know. Bonds are return-free risk. Once again, they are always called risk-free return. No. They got the message wrong. They are return-free risk. Bonds are a horrible investment right now.
Okay, so broad strokes to summarize, inflation has jumped reportedly at least 7.9% in the last year. We just closed the worst quarter in the American markets in 2 years. We're looking at a 2 and 10-year yield curve inversion, and these are red flags for a recession. How does Bitcoin fix this?
It's the best savings technology, right? If you're losing money, if the value of the dollar is dropping, why would you hold it? Why would you hold cash?
Beautiful.
Right?
Yeah.
Why not just hold something that is appreciating in value, which is Bitcoin? And it's not like property or house where you have to maintain it. You have to like pay property taxes. You hold it and just like, I don't know who it was, but they mentioned at the end, buy Bitcoin and just leave it for 5 years and go to sleep.
That's
fall
so,
asleep.
Yeah, that's
And-
your low time preference.
Yeah.
Beautifully said. Well said.
Bitcoin's a mechanism for truth, like truth in signal of where people want to place their value. And, you know, we have the CPI, which has been totally perverted since the 80s. It's been destroyed, and I encourage people to check out a website called Shadow Stats that will go through and show you what CPI used to be. It used to measure a constant standard of living, but then they made tweaks to it so that they could swap in different baskets of goods. They could account for improvements of things to basically say, like, you cannot, this is, your phone is twice as good, so, you know, it technically costs half the price is basically what they're getting at. But that's not out-of-pocket cost. So it's not accurately capturing
What is it, Ben?
inflation.
What is the real number?
Oh, it's well into double digits.
20%.
Yeah.
If you measured inflation using the 1980 formula, you're at 20% annualized.
That makes sense. Yeah.
There you have it, folks. And fundamentally, I think Bitcoin is recognized first as a store of value by most. So if you're feeling this inflation, if you're feeling these gas prices, if you're feeling your time devalued, it's being stolen from you by the government. Greg Foss here can't make it through the Bitcoin 2022 conference without getting pulled aside. He's such a great guy, man.
Appreciate
You're a
being on
legend.
here, guys.
Yeah.
Pleasure meeting
You're
you.
awesome.
Ben
Thank you.
Sessions, rock and roll. Canadian truckers, rock and roll.
Yes.
Let's go.
Amen.
Yeah.
Oops.
We can. We're high energy here this morning. People are shuffling into the Bitcoin conference. It's exciting, guys. 25,000 plus Bitcoiners all together here.
It's beautiful.
Yeah.
Spreading the gospel.
Yeah. Call out to David Bailey's mom, Callie.
Shout out Callie Bailey.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Welcome back to Bitcoin 2022. We are live at the Marathon Desk, hosted by Bitcoin Magazine. I am Q Gahimi, host of Bitcoin Magazine Live. I am joined by Nolan Bowerly, Michelle Fawn, and Aubrey Strobel. We are coming to you from Miami Beach Convention Center. Guys, how are you guys feeling about the conference? We are at GA Day 2, day number 3 out of 4 of this event. Nolan, what are your thoughts on the first couple of days?
I mean, I'm loving life. It's been great, right? It makes me enthusiastic about stuff. It makes me be able to picture the future a little easier. And being around people that are optimistic about the future is just different than what's going on outside. So that, I think, to me is pretty contagious, pretty fun, pretty energetic. So that's what I've been loving.
Love hearing that. Michelle, yesterday we heard from a few different Cash App partners previously, Serena Williams, OBJ, as well as Aaron Rodgers, talking about their experience with Cash App. You recently did a Cash App giveaway, which thank you for giving me some free sats.
You got some?
I got
you
some
actually want some?
I actually want some, so thank you for that.
Oh my gosh, you're welcome. That's going to be worth so much money in the future.
And I can't wait. And your video too with that, explaining your background, explaining how your parents raised you to have sort of that financial understanding.
Yeah.
Talk a little bit about the experience working with Cash App there.
Oh my gosh. I mean, they were so fantastic. I think they watched a few of my videos where I talk about Bitcoin, and I try my best to just explain it in a way that anyone can understand. So that's why I focus more on savings technology and how like we all were taught at a young age to put money in the piggy bank. And then if there's an emergency or something, you just break it and you have some money to use. And that was a narrative that I'm trying to push. And then they loved it. And so they partner with me and they're like, look, just whatever you want to say, do it. And we gave away $250,000 worth of Bitcoin. And I'm so happy you got some.
No, I'm grateful for it as well. For those of you who are not subscribed, please make sure you press the subscribe button down below. I promised David Bailey we would have 100K. We would hit 100K by conference day.
What are we at?
I was talking 100K subscribers, not 100K price. So please make sure that I have a job.
It would be nice to have both.
How close are we? How close are we on?
We are about 15,000 subscribers away. So please, I know that you guys are all out there. Hit the subscribe button. Aubrey, you talked a little bit earlier today about how you are excited to see the green energy panel. We are about to see that coming up in just 2 minutes now.
Yeah.
What are you looking to see? What kind of conversation do you want to see happen there?
Well, yeah, this is a topic that I'm extremely passionate about, and trying to sort of get away from a lot of the FUD that's been happening by our politicians and the media. And I think Nick Carter has done such a great job of putting really good research out there and providing those tools, which, I was going back to. It's like we have to provide these resources for people, and in a way that's digestible and easy and that can understand, so that people realize that Bitcoin isn't this awful thing that's happening to the environment, that a lot of this is happening through renewables. And then, like we were saying earlier, people thinking that transactions are actually what's driving it. It's totally not true at all. It just is a confusing narrative. And I think the people on this panel have done a great job of demystifying a lot of that stuff. So I'm excited to see how it goes. And yeah.
Absolutely. And to your point, there is a lot of FUD, and it seems like the main FUD around energy is Bitcoin uses too much energy. Yeah. Very quickly from each of you, I'd love to just get a one sentence or short response on someone says to you, Bitcoin uses too much energy. Nolan, we'll start with you.
Probably not enough, and it's going to lead the financing. It's going to lead the financing of all renewables. I can see the financing that goes into the mining race can easily be transposed into financing nuclear reactors.
Michelle?
Well, Bitcoin, or not just money in general, is energy, and Bitcoin is encrypted energy. So I believe energy should be money, and this makes sense. That's why there's a volcano behind us and everything.
Aubrey, as quick as you can.
If there's something valuable, there needs to be energy that is traded off for that. And I also lead them to my Hello Bitcoin video, which is a little bit longer. It's like 8 minutes long, but it helps.
Awesome, guys. Well, thank you so much. Thank you guys for tuning in. Make sure you smash that subscribe button so I can keep bringing you guys content. Bitcoin Magazine can keep bringing you guys content. We're about to hear now from the You Are the Carbon They Want to Reduce panel, hosted by Nick Carter. Stick around. We're going to have incredible guests throughout the rest of the day. Michael Saylor will be joining us here on the live desk, as well as Max Kaiser and Stacey Herbert. So please stick around. We'll be back shortly.
Check it.
Orange pill people, thank you for your patience. I demanded everybody shut down the production. I had to recondition my hair. The Miami humidity is a little challenging on me. Y'all in the back, can you see my hair okay? Thank you. Thank you. You don't care, but thank you. Well, welcome. And I'm curious, just by show of hands, who's just getting here and didn't see the last segment? Some of you? Cool. Congratulations on being hungover. We're going to get rolling here. Our next segment is You Are the Carbon They Want to Reduce. And I'd like to introduce General Partner from Castle Island Ventures, Mr. Nick Carter. And next, co-founder from Core Scientific, Darren Feinstein. And next, master of hash, Mr. Stephen Barber. And he wins the Mustache Award of the day. I think it's beautiful. And next, I'd like to introduce Head of Mining Galaxy Digital, Miss Amanda Fabiano. Welcome. And this panel will be moderated by technology reporter from CNBC, Miss Mackenzie Segalos.
Hey there. Today we are talking about Bitcoin mining, and it is one of the most fundamentally misunderstood sides of the network, I think, and it's also one of the biggest critiques. And I am joined by 4 experts who understand this industry inside out, on-grid, off-grid, renewables, co-locating with nuclear plants, flare gas, and we're going to get into all of it. I also just wanted to say that these 4 people are on my speed dial, and more often than not are on the phone with me at midnight on a Tuesday, teaching me about how Bitcoin mining helps to stabilize the grid. So I'm very grateful to have these folks breaking it down. I think where we start is the dynamic that is fundamentally misunderstood about Bitcoin mining, and that is the fact that energy consumption is not equivalent to carbon emissions. And I wonder if someone can kind of just tackle that definition and explain the distinction there, and then we'll get into the nuances of that. Darren?
All right. Thank you very much. Thanks for having us. Thanks for joining us. The energy footprint for Bitcoin is probably one of the most talked about metrics in the mainstream media of almost any industry. And so you would think that the footprint of the energy used globally by the network is massive, and you'd be wrong. It's an inconsequential number. What you hear all the time from mainstream media, except for Mackenzie, is that the Bitcoin network uses more energy than a small planet. Small planet. Too many cocktails. A small country. So what they say is the Bitcoin network uses more energy than a small country. The Netherlands, New Zealand. What happens is they frame the energy problem on a global basis, and they try to scare you into thinking that's a lot of energy used. Well, we know how much energy is generated on the planet Earth on an annualized basis. It's 160,000 terawatt hours of energy a year. 160,000 terawatt hours of energy a year is a very important metric to understand if you're going to have a conversation about energy use by the Bitcoin network. So that's the most important number to understand. And then you need to understand how much energy is used globally by the Bitcoin network. Before I tell you the answer, I'm going to tell you 2 articles that came out in 2017 that told everybody this. And the articles were written by, not surprisingly, the World Economic Forum and Newsweek. And, and the World Economic Forum and Newsweek in 2017, coincidentally, came up with the same math, and the math was that in 3 years, by 2020, the Bitcoin network will consume all of the world's energy, all of it, and you can look those articles up. They exist, unfortunately. And I was building a facility in 2017, and the people that came up to me were hysterical that we were destroying the planet, so I had to start developing a response to that. Well, we know that the World Economic Forum and Newsweek were wrong, right? Because the lights are on in here. We're not using all the world's energy by the global Bitcoin network. But how wrong were they? right? How wrong were these two mainstream media conglomerates that have a very important and very good marketing strategy globally? How wrong were they? Well, the Bitcoin network today, in 2022, 2 years after this prediction of Armageddon, uses 220 terawatt hours of energy of the 160,000 terawatt hours of energy that's generated globally. It's an inconsequential number. It's a fraction of a percent of the world's energy. Other large industries, manufacturing, automotive, when they tell you how much energy of the global energy that they use, they round it off by 1 or 2%, which means that this industry is a rounding error to other large industries. So you have to understand that the total energy used by this network, it's inconsequential on a global scale. Then we get down into regional and local scales, and those become more important to make sure that we're good partners with the existing grids. And I'm going to stop talking because I could.
So, and then on the carbon emitted side of this equation, right? Like that has to do with your energy inputs. And I wonder if, I won't put anyone on the spot, but does anyone want to tackle that? We'll get into like the more specific breakdown of power supplies, but does anyone want to generally speak to the carbon emission side of Bitcoin mining?
Well, a couple things about carbon emissions. Everyone's caught up on the total CO2 production, but emissions are generally a proxy of productivity. The more, generally speaking, the more we're emitting, the more productive we're being, because fundamentally there's nothing we can do that doesn't emit carbon. So I just find the whole thing with the carbon accounting for dictating if something is clean or dirty to be sort of a subjective, almost like a social credit attack on the world's energy network. Because at the end of the day, I mean, if Bitcoin miners are being paid to mine Bitcoin, that's because someone values it, and just trying to qualify that energy use as clean or dirty instead of how productive it is or how many jobs it creates.
Yeah.
It's sort of an odd thing to me.
I mean, let's get into that, right? Like to justify energy being used, you need to be solving a problem. So what problem are we solving? It's accounting tech, but Bitcoin is also very much about freedom. So maybe Amanda, you want to?
Yeah, and I just think that we focus so much on the energy narrative, and we shouldn't. We should focus on like what Bitcoin does for the world. Look at like this event. Right, from last year to this year, there's been so much more adoption. And with the world's macro trends that are happening, like Bitcoin opens a door for more financial freedom. So if we judge everything on its energy usage, it's a crazy concept. Like energy usage is not a bad thing. It just comes down to what we think is useful sort of energy, or useful use of energy, right, for whatever. I personally think the best sound money that is open to the entire world is a great use of energy, especially if it's only less than 1% of the entire energy that is used.
In America, how are miners protecting the grids? And I asked this question somewhat in the context of Texas specifically. Spent a few months there, and I learned a lot about ERCOT and grid dynamics, and Nick was a very helpful tutor in that. But, I mean, maybe we look at Texas. Like in February of this year, a lot of people saw the storm that came through as this referendum of Bitcoin mining. A year prior, obviously, it was devastating to the state, and so people wanted to know whether Bitcoin miners would potentially exacerbate a storm situation. And what we saw were a lot of mining operations preemptively power down and do exactly what they were designed to do in this relationship that they have set up with ERCOT, where they are a flexible buyer who turns off. And so kind of going back to that first question I put out there, how are miners protecting the grid in the U.S.?
I can chime in here. So these three are the experts, and actually mine, I'm just sort of an onlooker. But I think the thing to understand is that miners are performing a single process trillions and trillions of times a second. That process is completed with each hash, and then it renews, right? It's a probabilistic function. It is not a linear, sequential process where you need a number of things to happen all in a row for the sort of industrial process to complete. Now you compare mining to a cement factory or to an aluminum smelter or a steel mill. Those are sequential processes They're complex. There's a lot of interdependencies. Bitcoin mining is one of the simplest industrial processes that exists. So that means that a miner can interrupt their load at a moment's notice. They can curtail it. They can modulate it up or down. And effectively, that makes them extremely good buyers of energy, because in response to either price signals or grid operator requests, they can curtail their usage at a moment's notice. And they can do this in a much more efficient and complete way than other industrial loads. So that means they can be extremely benevolent presences on the grid, where during a grid scarcity event, the miner will be able to curtail their usage. And if you look at the Texas power distribution, there's a lot of very cheap, in fact, negatively priced energy portion of the time, and relative abundance of energy much of the time. And then it's a small fraction of the time where there's a grid scarcity event, in 2021 most notably. So what miners do is they chop the tails off both ends of the distribution. They're scooping up energy that's otherwise going unmonetized, and then during that right tail of the distribution, when the grid is under stress and energy becomes very expensive, miners participate in programs such that they're curtailing their usage. Or they're just economically, it's not worth it for them to mine if spot prices go really high. So what they do is they fill in the valleys, or they chop off the tails of that energy price distribution, which is overall a very good feature for the grid, I'd argue.
Another grid dynamic that I want to get into is the idea of increasing its capacity and onloading renewable energy sources. And again, I go to this example of Texas, where you have all of this wind and all this solar power, but it's inherently very volatile. And when you add those kinds of energy sources to the grid, you need a base load. You need, the counteract, the demand to balance that out. Does anyone want to kind of get into that and explain the dynamic and how that's also increasing grid capacity?
Well, you have, as you pointed out, you have baseload energy, which you need all the time to make sure people can live their lives. Then you have intermittent energy, which is mostly the renewable energies. And intermittent energy is intermittent because it's not always running. It's not always generating energy. The sun doesn't always shine. The wind doesn't always blow. And so how do you create more energy generation on a renewable side? Well, you need, and this is well known, you need flexible load takers of energy, so you can build a higher peak available energy footprint. When you create that higher peak energy footprint, you always have that energy available for emergency events, or if the intermittent energy is not available. And so what you find, and Nick just talked about it, is that you need to find a very specific customer that could just power down at a moment's notice if the grid asks. And the reasons are economic. If they ask you economic, there's a price increase because there's not enough energy available. There could be a controlled load event, or there could be an emergency, a weather event. And to find an industry at scale to power down is very difficult. If you look at the traditional data center industry and you ask AWS to power down, that's a really bad idea, because people are going to die. They run air traffic control, they run the traffic lights, they have all the hospital databases. You don't want to turn them off. But as Nick just pointed out, you can turn off a Bitcoin mine in a moment's notice. Within seconds, we can power down. All that energy can be rerouted to the customers of the grid that need it. And at any point in time later on, we can power back on, and nothing happens to anybody of any consequence. And so that's why anytime you have a Bitcoin miner on your grid is stronger, because we're the first people to power down. And we've been doing that. Core Scientific, the company I co-founded, we've been doing that since inception. We have agreements with the grid operators in multiple states, and we report on a monthly basis how many times we power down and give that power back to the grid for whatever the circumstances are.
So Nick had talked about how this is changing the price dynamic. Like, you no longer are seeing as often negatively priced power or exorbitant fees. So on net, do we know if this is lowering prices overall in terms of how this is, personally being felt by people?
I would say it's hard to quantify. It's indeterminate. You can find papers that say, in a specific region in New York, these miners came in, and then the academics build a very fancy model, and it spits out, unsurprisingly, the result that miners increase the power and they ascribe to a single variable power increase, which is a very multivariate model. But I think it's absolutely the case that miners are providing a unique and differentiated service to the grid operators themselves. They're effectively selling insurance products to these increasingly variable grids. And as you onboard more variable intermittent renewables, you need more insurance. You need more sources of grid flexibility. Now, demand response is not the only source of grid flexibility. You can have interconnections, you can import power from other places, you can do pumped hydro, increasingly maybe you'll do battery storage, things like that. But there's no question about it, and renewable-focused organizations agree, the world needs a lot more demand response capacity to deal with more renewable grids. And Bitcoin mining is the fastest growing demand response enabled industrial sector out there, and it does it in a much purer way than other industries do.
Generally speaking, power plants like generators have to oversize to to meet the fluctuating demand of the market, like just residences peaking in the day, troughing at night or whatnot. So because they have to oversize that, they put a lot of capital in that power generation, that infrastructure. So when that's already out there, you can consider that like sort of sunk capacity. So Bitcoin mines are a nice efficiency because they can load those up when they're, especially on the renewables that are already they have to be overbuilt due to their unreliability. They have to be overbuilt to bring in the renewable energy when needed. So building a Bitcoin mine for those applications would absolutely help increase their profitability for existing. What are you grinning at?
I'm just cracking up at the air quotes around renewable.
Well, there's nothing renewable about them, but like I don't want to. You don't have to.
We haven't had you on your soapbox yet. I want you to stand on that chair.
I usually refer to them as unreliables, but I picked that up from Alex Epstein. But they have to be oversized to do what the goal is, and that's to offset for these projects, wind and solar, like fossil fuel generation. So that is where Bitcoin is doing a really great thing, because it's this sunk capital, this sunk capacity, that curtailed power is actually getting monetized. And you see that in every sector, including oil and gas, which is largely upstream of the grid.
Yeah, let's talk about oil and gas for a minute. So I've been reporting on Exxon, ConocoPhillips, and other oil and gas players getting into the Bitcoin mining business. It's fascinating, this dynamic of off-grid mining. So we just were talking about on-grid mining, and now we're talking about going to an oil and gas field and, bringing a trailer of Bitcoin miners, putting them on the oil pad, and then using natural gas that you can't get it into a pipeline. And so your options are, no, wait, Steve should be explaining this. Steve, explain how this works.
You're doing a wonderful job. So, yeah, I mean, that's our company's background, is primarily off-grid oil and gas, Bitcoin mining. There's a lot of problems that an oil and gas producer will face. Sometimes it's jurisdictionally dependent. The US and Canada, we have different regulations. But generally speaking, you produce oil, you have associated gas. It's sort of like opening a can of pop. You have all that foam that comes up. It's just like an oil well. And that gas is hard to get to market. So oil and gas companies, they want to get it to market. But if it's not economically feasible to get to the market, they only have a couple choices. And that's, well, of course, use what they can on site, which is what they do, and dispose of the rest, and is in the best manner they can, in the most efficient, call it waste disposal manner they can. And that'd be like something like flaring, or in some cases venting. So the upstream oil and gas industry, which is a very distributed, call it upstream of the grid, there's a huge opportunity there for Bitcoin miners, and we're seeing it. I don't know if anyone was in Houston last week for Empower. That was a great conference, and it was all oil and gas and Bitcoin people, and the absolute electricity and the growth in that space is something else.
I think that's really a cool thing, right? Because you have oil and gas industry coming into mining. You have traditional energy companies now looking into mining. And then you have miners who have been looking for those low costs of energies coming in. And Bitcoin is an option for all of them.
Yeah.
And just to the point earlier on, like grid, stabilization, the great thing about like Bitcoin in general is it is this decentralized network. So if Darren decides to power down in Texas, there's still miners somewhere else, right? And we saw this happen last year with the Chinese ban, right? 50% of the network went online. Network still operated perfectly. And so Bitcoin is like the perfect solution for people trying to, be in locations where you can use the energy grid to your advantage.
Mm-hmm. No, I immediately thought of Kazakhstan, which is, become a major destination for Bitcoin mining in the wake of China's countrywide ban against the industry. And it was the exact same thing. You had the power network go down, like a lot of the mining, it was no longer happening, and it didn't affect the network. Like, it didn't skip a beat. It's a very interesting dynamic. One other thing on oil and gas that I wanted to ask about, I was chatting with someone on your team, and he made the point that like a year ago, maybe a year and a half ago, he was being laughed out of boardrooms with this idea, and now it's very much becoming a mainstream practice. And I just wanted to ask you about this normalization of Bitcoin mining in the oil and gas industry.
Well, we still get laughed at at executive meetings sometimes. The price of oil is so high, they're like, oh, that payout is crap. Like, I just drilled more wells, right? But the dynamics definitely changed. When we started, we're Upstream Data as my company. It was sort of 2017, we were sort of drumming up the Bitcoin mining in the oil field, and we got our first skids out there. And there's a lot of skepticism. But it's sort of turning around. I mean, we're still finding a lot of resistance with oil and gas companies to actually self-mine their own coins, which is always what we've been pushing because it's just the natural fit. Because the thing about oil companies is if they start using this tech and if it's an emissions reduction thing that they have to do for regulatory compliance, or if it's purely they just don't want to waste that limited resource, they get the most benefit because especially when it's like a compliance thing, if they have to drop their flaring rates or their venting rates, they'll actually produce more oil because of it. They can turn up the oil tap. It's sort of like, they can, the more, I guess you shake up that pop can, the more Coke can come out, but with that, the more gas. So they can turn up the taps if the Bitcoin miners suppress their allowable vent rates or flare rates. So it's actually a match made in heaven for oil and gas companies because it's a portable, I like the term digital pipeline, right? It's a portable sales point, and it allows them actually to do their core business better than they would otherwise, more so than just mining Bitcoin and making the Bitcoin money. So.
A year ago at this time, at this conference, Nick Carter said nobody is writing about this westernization of hash rate, and they should be. And then I did. And it has just been this black swan event for the industry. And maybe Amanda, do you want to talk about just how significant this transition has been in the last year?
Yeah, so I sit in a pretty interesting spot at Galaxy. We both mine for ourselves, and then we provide financial services to miners. So a lot of the miners that are trying to build or looking for more capital are coming to us. So we have like a relatively holistic view of what's going on, where the network's going, and it's been really fun to watch. There's a lot of new entrances of people that see the value in mining, right? They see companies like Core, in their press releases coming out and seeing like how much value they're being created, and I think people are really interested in it. The westernization of it is kind of fascinating. So at the beginning of last year, we had 2 public mining companies listed on the NASDAQ. At the end of last year, we had about like 20. And so there was this proliferation last year of this push towards getting access to that public markets for liquidity and for more access to capital. Because as we all know, it's really expensive, right, to get a mining company up and running. And I think what that has done is it allows us to see more into the network, right? Like we're able to see like how big is each company's hash rate, right? Like how much are they growing? Where are sites going to? And so it's been, for me, the last year has been this year of transparency in Bitcoin mining. Traditionally, it's been a really, I don't want to say shady industry because that's the wrong word, but more like guarded industry because your secrets are how you build and where you get cheap power. So the Western migration has been fascinating, but I think it's also matured the industry a little bit because we can understand a little bit more of like what's going on with each company.
Yeah, and it's certainly changed the power mix. The U.S. is now the #1 destination for Bitcoin mining on the planet, and I want to get into the nuances of how that's changed. But first, I want to ask. Is it upwards of 75% of the Bitcoin network was in China before this ban. Now it's largely in the US. That percentage keeps going up. I'm referring to data out of the University of Cambridge. my question is it a bad thing to have so much of the network centralized in any one country, whatever the country is?
I guess it is, and it isn't. I mean, we don't want Texas to get over 50% and the governor, orchestrate a 51% attack or something. But, I mean, decentralization, I guess, is only as important as when it's needed. It's sort of, I was doing a panel yesterday, I was talking about like regulation and can cause decentralization because if it's rules that puts a miner out of business, they might what happened in China with basically the CCP, a regulator coming in and kicking them out. Well, that in a sense decentralized the hash rate across the globe. I mean, to all those countries you mentioned, the U.S., Kazakhstan, et cetera. So decentralization is sort of like a response to censorship or regulation. We absolutely don't want everything in one. Like, you don't want all the hash power, all the ASICs owned by few entities. You want that spread out as best as possible. But at the end of the day, I mean, all we can really do is as individual miners is try to make money. And there's going to be certain forces that cause it to centralize, like fiat. Fiat money printing is a centralizing force, right? It's a consolidating effect. The people that are close to the money printing spigot, they get the lowest cost of capital, they get to buy up assets, they can centralize the hash rate. But there's other forces like regulation that will push it the opposite way. So it's like a balance, I think.
And we're seeing the network diversify and distribute globally. There's sovereign wealth funds and governments globally that have been looking at initiatives to pour hundreds of billions of dollars of capital into the industry in their region. So I think...
Where? Or tell me off stage and I'll write it up.
But so we're seeing this diversification happen. It's going to happen naturally. We benefited, as you said, from the Chinese government shutting off the industry within their borders, and they had such a big footprint. And I think the Chinese people are going to, this is the biggest economic, financial, and accounting technological innovation in our lifetime. And I think where you shut this off, you harm your economic your ability to perform on a world stage. Because now, because of the openness, unalterable, immutable ledger, that this is what this technology is. It's an accounting ledger. It's the most important accounting ledger ever invented. And if you cannot participate in it, you're going to miss out on the billions of human beings that are going to be on this network. And we've seen that rise. I mean, when we first built our first building in 2017, there were 2 million people on the Bitcoin network. Now we're somewhere between 120 and 150 million. If you look at that growth trajectory, it's very similar to the internet. And you still saw, even with the internet, I think it came out in, to the public in the 80s. People started using the internet in the 80s. And there were articles in the late 90s, 98, 99, saying the internet was a passing fad. So 14 years after the internet came out, people are already writing it off. So we see the same messaging going on with our industry that happened previously with these others. Same thing on the energy footprint. When emails came out, guess who didn't like it? The U.S. Postmaster General. He doesn't like emails because that takes the amount of postage that goes out and reduces it. And so how does he combat emails? He says emails use too much energy because you can quantify it because it goes through a server as opposed to all the trucks and the humans and the buildings that you need to build the post office. And he actually went to Congress. The U.S. Postmaster General went to Congress, and he tried to stop emails and implement a stamp tax. They tried to put a stamp tax on every email in America. Unfortunately, they did not succeed. But so any analog system that goes to a digital system, we start to see the energy and the reason for our panel, the energy and thus the carbon footprint. I think it's also important to point out a miner is a silly word for a computer server. That's all it is. A miner is a computer server in a data center. And that computer server, it emits zero carbon. There's no carbon that comes out of a computer server. The carbon comes from the energy generation source. And so you got to look upstream to see where the energy comes to power that.
And let's talk about that. So when you think about the power sources in China, like obviously coal power plants were a part of it, but there was also a lot of hydropower during the wet season. So how have the energy inputs changed now that much of the network has migrated to the U.S.? Amanda or...
Sure. So I think, one of the things that has come out over the last year too is something that, Darren and I worked very closely on, was the Bitcoin mining company. And I think, we were, and not to speak for you, Darren, but we were kind of sick of this narrative, right? This push that everyone was saying, like, Bitcoin's so dirty. We were like, it's not dirty. We're all using, relatively clean energy. So a group of miners came together and we just said, hey, let's just share our energy sources. And, we release quarterly data for anyone that wants to join. In last quarter, we accounted for almost 50% of the network, and that was a 66% sustainable energy mix. And when you compare that to other industries, one, you don't know other industries' energy mix, right? Like, they're not transparent at all. Last year, we did a research report. We tried to look into the gold industry, and we tried to look into the banking industry. Like, encourage you to try to look for their energy sources, because it's absolutely impossible to collate it and find it. So I think, the network itself and the participants in the network are like good actors that are just saying, like, yeah, we use energy, but the majority of it is clean, right? And I think, it's just like incredible how much has happened over the past year to really like push the industry forward, and also like really focus on that, energy narrative, like kind of squashing that narrative.
One thing that's interesting to me in terms of renewables in the US is this idea of creating a financial incentive that doesn't exist to build out this infrastructure. And I've actually, there's news coming out at 10:45 on this that's going to get at that. But what I want to ask you is for someone on the panel to explain this dynamic where you've got stranded renewable assets in West Texas you can't otherwise get on the grid, and Bitcoin mining can actually help to give these players a reason to build out infrastructure to harness that energy. And Nick Carter obviously is going to tackle this.
I think Steve might have a contrarian take on this as well, but I mean, look, the energy, building an energy grid, you don't have perfect knowledge of the future. You don't know what's going to happen, decades from now in terms of demand. And energy grid operators, their job is to match supply and demand. When you're building out these assets, you expect them to last for decades, but you just can't know what the sources of load are going to be locally, years and years from now. And you don't know what the transmission is going to look like either, right? It's not just about generation, it's also about transporting that energy. So, of course, you end up with supply-demand mismatches. And if you look at maps of renewable or negatively priced power in the U.S., it increases every single year. It marches up and up and up. The negative pricing events in the U.S., particularly in the wind belt, going from Texas up north to Canada. And the reason we have negative pricing is because actually wind producers get a tax credit, and so they're incentivized to actually negatively price the energy. So that alone is evidence that there's a mismatch, and we don't do a perfect job at integrating new, especially renewables, into the grid. Oftentimes renewable assets, they're all correlated in the generation patterns, right? Because if it's windy, on the site of a wind farm in Oklahoma, it's going to be windy in the one right next door, and so they're both going to be trying to sell into that. There's just an enormous challenge that we have in terms of integrating these new sources into the grid and building transmission and distribution. So having that offtake ready to go, this economic pressure, is tremendously valuable. Now, I'm uncertain as to whether mining, off-grid with just renewables at a 20-40% capacity factor is going to work economically. However, the models we're seeing now from a bunch of innovative miners is a model where they engage in grid firming. So they're the economic offtake for maybe new renewable installations part of the time, and then they pull from the grid the rest of the time. So it's a hybrid model. And the critics always say, oh, it doesn't work, you can't mine with renewables. That's just not true. There's plenty of evidence that it is happening, and it's press release after press release. And I don't know what's dropping in 10 minutes, but I'm excited.
It'll be on CNBC.com. Steve, do you disagree?
I just find the idea of stranded renewables to be just like a mind, we're purposely building renewables. They're purpose-built projects. So why are they stranded? There should be more. It sounds like there's a lot of capital misallocation with those projects. Stranded gas, that's because, it's an old oil field that's matured, or it's like the associated gas problem I described, where it's actually a byproduct of the oil and gas production. But if you're purposely building renewable, whether it's solar arrays or wind farms, this sounds like there's a lot of poor planning in place if all that energy being built out isn't going into the grid and offsetting what they're intended to do, which would be fossil fuels, presumably coal. So that's sort of like a bit of an odd thing there, because if miners are going to use any of that renewable energy that's being generated that could have been sent to the grid, then it's not doing what the original intent was, and it's being subsidized for no reason. It's subsidizing Bitcoin miners, in effect. And I just wanted to say that, everyone's so caught up on carbon emissions. Whatever happened to job creation? Everyone apologizes for the coal they're burning, but what about the jobs and the local economy we're boosting? I think that's a narrative. And since I'm on a public stage and I get to speak about it, I would hope that more bigger miners would start doing press releases about all the awesome things you're doing in your local economy. It's let's stop apologizing for the coal, or for the carbon and the coal.
I think we have seen that, though, right? We've seen Riot come out and talk about how they employ over 300 people.
That's because we're all starting to troll on the internet, and it's good to see.
You're a good troll on the internet.
It's very good to see. That's what we need to do, right?
Yeah.
I mean, when you talk about the capital allocation for a lot of the sources in the stranded renewable specifically, what you had is you have different circumstances that create those energy generation facilities. Specifically, not in Texas. I could talk about North Carolina and the Appalachian Mountains and that Tennessee Valley. The United States government in the 40s built a massive amount of infrastructure out there, critical infrastructure, that was hydroelectric plants. They dammed up, excuse me, they dammed up these Tennessee valleys and created hydroelectric plants, and they needed all of that energy to create the Manhattan Project atomic bomb. And after that was done, now you have 30 hydroelectric plants with a massive amount of hydroelectric power that's stranded renewable. They're generating the power. You can't move it past 500 miles, and it's just sitting there in these very unpopulated areas. And so Bitcoin miners like Core, that's where we located first, up where the stranded renewable energy was, as a result of the allocation of capital at the time was not misallocated. And so, but now when you talk, that's a really good point. In Texas, when we're going to start building, and you're going to see a lot of new projects coming online that are going to be renewable based and renewable generation power, you're going to start to see what that does, as you brought up before, what that does to price elasticity in Texas. And the conversations that we're having now are the opposite of what you think they are. The conversations now are, there's so many new renewable generation facilities coming online that they're worried that the price of energy is going to go to zero. It's going to go to zero, and it's going to put out of business all the legacy baseload energy. And so if that happens, then it's not economical for the baseload energy folks to stay in business, and then you lose your baseload energy, and you only have intermittent energy, and you have a big problem. So there's a lot of metrics that are going into play in terms of how people capital allocate, where these facilities are built, and even into the economics and price incentives on how you subsidize them or not. And so, but there's a lot of thought that goes into it. The larger scale Bitcoin miners, we love Steve and the rest of his the plebes, and we really but we really take it seriously, the messaging, which at the end of the day, we're all on the same team. We have a huge marketing problem on a global basis, because the forces against our industry are united. They're united against us, and they're very good at marketing. And the Bitcoin industry folks, we're decentralized. We like to do our own thing. We're all very entrepreneurial, the thought leaders and the founders of companies. And so we've gravitated towards this industry to kind of do our own thing, participate in the network as we see fit. And the problem is, and Amanda brought it up, the problem is that doesn't work on a marketing front, because there's a united message against us globally, and we're all saying our own thing on our own. And so for the last decade, as I've tried to explain to people that what you hear in the mainstream media is not necessarily true, we do it alone. And if we do it together, which was the genesis of the Bitcoin Mining Council, and we put out a quarterly report from the Bitcoin Mining Council every quarter, every 3 months, that talks to specifically the energy footprint of the network. And when Amanda says sustainability, that means carbon neutral energy. So carbon neutral energy, including nuclear. And so it's important to really combat the narrative that exists on the mainstream. It's tough to say collectively, but Michael Saylor had the best quote for the Bitcoin Mining Council, and it's, we could be decentralized, but we don't need to be disorganized. And the messaging in our industry, as you've heard today from everybody up here, is enormously factually positive. The facts in terms of energy use, carbon footprint, job creation is all positive. Innovation, technological advancement in America, it's all amazing. But if you look at any articles, they're united in telling everybody that this is going to burn down, literally use all the energy on the planet Earth and destroy everything.
So, and last question on this, what is your outlook for the industry? Is it on-grid? Is it off-grid? Is it on-grid with miner-specific regulations like we're seeing in ERCOT? Is it outlawed in the West and it goes to petro states? Like, what are we looking at ultimately?
I think that is the most beautiful thing about Bitcoin mining. It doesn't matter. There's not a one-size-fits-all. There's people that are mining off-grid. There's people that are building massive, facilities in different locations that are jurisdictionally friendly. And I think that regardless of what that business model is and what that strategy is, Bitcoin doesn't care. It's going to continue to operate. It's going to continue to be decentralized. And we all might have different strategies, right, on how we think and approach the network. But it's going to continue, right? So I think that we're going to see more home mining, which Steve has been working on. We're going to see large companies like Core and Galaxy and all the affiliated companies that Nick works with, continue to grow and scale. And I think, the next year is going to be really interesting in mining to see what happens.
Steve?
Yeah, I see it moving mostly upstream in terms of like big industrial mining, miners that are going purely off economics, like money making. Upstream being towards the generating source, right? Because you have a generating source, you have a load, you have transmission. A lot of the mines right now are somewhere in between, right? A lot of the hash rate is somewhere on an interconnect. From a pure efficiency standpoint, there's certain upsides to that, like capital allocation, project execution. There's a lot of things that make that easier. Not that it's easy, but there's also some inefficiency, like transmission losses, which you don't really need when you have a portable load, a portable buyer of electricity. So that's why I see it going upstream. I mean, if you guys were in Houston last week, like I said, it's clearly moving upstream. There's so much going on in the upstream oil and gas industry. And I mean upstream anywhere. That could be hydro, like you're talking about the stranded hydro, the stranded wind and solar, upstream at the generating sources. But a lot of those generators, they're independent. They're not a lot of them want to get into Bitcoin. They don't want to invest in a Bitcoin mine, but that's sort of inevitable that they will, I think. And then we do sort of focus on the home mining now as well, because we see a big opportunity there. I was saying yesterday that the way I justify saying it's both moving upstream and downstream. Downstream is how that's where you get the most privacy. You get the small scale mining at the most privacy. That's the people like the plebs, I don't even know how to say that word. They're interested in, and I know a lot of them are at this conference. I'm interested in KYC free coins. I like mining at home for that reason. It's not ever going to compete with the upstream sector or anything upstream of that, because it's just the furthest down. It's going to be the most infrastructure cost to get you that jewel. But the upside is privacy. You get peak privacy, and it's hardest to find millions of home miners and shut them down versus one big guy like at the source.
We're over time, but really quick, Darren and Nick, give us some outlook predictions.
Yeah, I think, listen, Steve and Amanda hit both those points. I think building the infrastructure is the hardest part of this whole industry. The people can buy miners and try to go public with 10,000 miners, but you got to plug them in and you got to run them, and they got to run efficiently. And building that infrastructure is difficult. Core, we have over 250 employees that build these facilities for the last half decade. So we're really involved in the infrastructure, and the infrastructure is very difficult. But the most important part of this are the plebes are the users of this network. And really, what we can all come up here and sit on a panel, but nobody cares. It's all of you out there really understanding these numbers and the metrics so that you can go out and defend the network, which is why we put out so much material on it. All of the thought leaders up here, Amanda and Nick for certain, and me and Steve are working behind the scenes trying to build infrastructure out in our own different ways. But the real important part of you all, and it's really important for you to understand the metrics, because the facts are on your side. The facts are on your side. You need to learn a few of the facts, and then you could go out and protect the network on your own.
Nick, round us out. Last word.
3 quick predictions from me. Every major petro state, energy-rich state, especially the rogue ones, will have nationalized Bitcoin mining operations. It's just another commodity. They're going to take advantage of that. Mining in the U.S. and developed nations like the U.S. regulators will ask that miners opt into these flexible load programs. So you'll see it, but it'll be with some conditions. And then every major energy firm will obviously, and they're already doing this, much more than people know, they'll also engage in Bitcoin mining as an offtake.
Thank you all so much.
Thank you. Thank you, McKenna.
Welcome back to the Marathon News Desk, hosted by Bitcoin Magazine here at Bitcoin 2022. I am your host, Q Gahimi, host of Bitcoin Magazine Live. I am joined by Pete Rizzo, Michelle Fawn, and Aubrey Strobel. We just heard an incredible panel about energy and mining. We are not going to break that down. We are actually going to discuss a much bigger story, censorship.
Yes.
For those who are not aware, last night, Bitcoin Magazine's YouTube channel was taken down at around 1 o'clock in the morning. Thank you to everyone who alerted us to this. Thank you to all on social media who helped run up a nice little groundswelling campaign.
Yes.
Shout out to Steve Lee and the team over at Block to help make this stream possible. And for those of you watching on YouTube, that only happened because we were able to utilize and capitalize on our 2.2 million followers on Twitter, all of the support we received and the pressure that YouTube had to bring us back online. YouTube, what the actual fuck is going on here?
Yeah, shocking and disappointing, I would say.
This is not the first time this has happened to Bitcoin Magazine. This is the second time, just this calendar year, that YouTube has taken down our channel.
Well, imagine if you didn't have the people helping or even like the connections. How many voices have been silenced over the years? We probably don't know. They're unsung heroes.
Absolutely. And Aubrey, I'd love to just ask you, what are your thoughts on where does freedom of speech fit into big tech? Does big tech have an obligation to apply the First Amendment?
Yeah, so great question. Obviously, we're here at a Bitcoin conference. It's censorship-resistant money, and it's just this ironic thing, right, that we get shut down here at this conference. And it's not the first time. We've seen this play out multiple times. Like you said, this is not the first time we've been shut down. And so big tech, they're private companies. They're centralized. They can do whatever they want. They have their own algorithms that we don't know about. We don't know the back end. And so, yeah, is it fucked up? Yeah, I was pissed when I saw it.
I will say, to your point, it was not an individual. It was not a person. I'm not confirming this, but this was an algorithm that did it. We reached out to YouTube ahead of the conference, actually with a genuine concern that this could be a possibility, that they could take our channel down, and we asked them, hey, work with us. Tell us what you need so this doesn't happen.
Wow.
Out of our hands. It's the algorithm.
Wow.
Yeah.
So at a certain point, we have to start asking, are we comfortable letting a computer algorithm make decisions for us? A computer algorithm to tell us what's in our best interest to hear, to learn about?
It's an algorithm programmed by humans, though.
Yeah, but it's politicized. Humans will have, we're greedy, we're selfish. I mean, we have so many different layers of emotions, but Bitcoin is just math.
Well, you were
just math.
You were saying you've been shadow banned when you feel like you talk about Bitcoin.
Yeah,
you were talking about
a few years ago, I noticed ever since I spoke Bitcoin, I had a hashtag Bitcoin. I saw a huge drop in my viewership, in my engagement. But it's fine, because I bought Bitcoin. So. But like I saw that and I realized, oh my gosh, like this is weird. And I even asked some people who work at these companies, hey, is there any like weird shadow banning stuff with Bitcoin. Like, we don't really know the algorithm. It's just like, we don't know. We don't talk about it. We don't want to touch that.
Well, I would just bring it back to money, right? This is a Bitcoin conference. We're here because these same decisions are happening in the monetary system, right? They're happening with our payment system. So we're talking about what's happening with information, with Twitter and YouTube. And, we don't want these same structures of power to form. We were talking about the division between Bitcoin and cryptocurrency, and I think the reason people are here, they're supporting Bitcoin only, is they want a decentralized alternative to these structures of power. Big tech is just an example of where decentralization led to centralization, that led to failure, and Bitcoin has the opportunity to fix that.
Exactly, because there's no point of attack. It's truly decentralized. There's no CEO, there's no LLC, there's nothing. It's truly a miracle that we're even here, that it's still running. China tried to shut it down 13 times.
This is
still running.
This is a test, though. If we get shut down after this, we both dropped 2 F-bombs here.
Yeah.
And we talked a lot about power and governments. If they shut us down, this proves.
Shout out to our viewers on Rumble, though.
Shout out Rumble.
Thank you
shout
to
out
all,
Twitch.
all of you.
Thank you to everyone who is tuning in on all of our platforms as well. I'm going to throw out one more. Fuck you, YouTube, for doing that.
Oh my God.
Damn.
That's definitely going to take us off.
Guys,
we're definitely.
I promised Pete Rizzo 100K by conference day. We are at 85K subscribers.
Or you would take off your shirt live on television, right?
I do not want, and you do not want to see me without a shirt on. So smash that subscribe button.
You're basically
Stick
chest
around.
hair
We are
out
about
right
to hear
now.
from our team over the Bitcoin Advocacy Project. They have a special announcement. A lot of incredible work. Quick also plug for our Bitcoin magazine. The Moon edition will be released at the end of this conference. And I'm going to tease really quickly that the next edition after the Moon mag is going to be about censorship.
Unbelievable.
Simple as that, guys. Stick around. We're coming to you from the Marathon News Desk, hosted by Bitcoin Magazine Live.
About Bitcoin. I don't know why I said anything about it. I don't personally understand the value of something that has no actual value. Okay?
They provide. They help terrorists, criminals move money around the world. They help tax evaders. They help startup companies commit fraud.
Crypto poses a variety of threats to financial stability, to investor protection, to our environment. But we also know that crypto provides a new payment option for criminals and cheats.
Hey, regulators, get up off your duffs and get in on this. We need the SEC. We need the Fed.
I look for colleagues to join with me in introducing a bill to outlaw cryptocurrency.
Welcome back, ladies and gentlemen. Without further ado, I would like to welcome to the stage the Executive Director of the Bitcoin Advocacy Project, Mr. Grant McCarty.
Thank you so much. All right. Thank you all for coming out. I'm a little torn here because This conference has been so incredible, and I see you all, and I can't help but smile. But I just showed you a video where we had a sitting member of Congress asking his colleagues to ban cryptocurrency and Bitcoin in the United States. So ladies and gentlemen, I'm here, in case you all don't know, to tell you that Bitcoin users are under attack. In the EU, they proposed legislation that would ban proof of work. Governments are linking Bitcoin to terrorist financing. In New York, their state legislature is considering a moratorium on Bitcoin mining right now. Politicians and big corporations are no longer laughing at us. They're using every political trick in the book to stop a global financial revolution. So, how do we stop them from winning? We fight. My name is Grant McCarty. I'm the executive director of Bitcoin Magazine, or excuse me, I'm the director of policy and public affairs at Bitcoin Magazine and the executive director of the Bitcoin Advocacy Project, an organization dedicated to supporting and defending Bitcoin users in the United States by fighting to protect self-custody and fighting to protect proof of work. Now, BAP has been working behind the scenes for months to give Bitcoiners the tools to win the war in Washington. Along with Dennis Porter, we developed one-click tools to contact your representatives. We've had over 10,000 Bitcoiners contact their elected officials through email and phone calls, and our politicians are listening. We've created candidate scorecards so that you can know if your politicians are pro-Bitcoin or anti-Bitcoin, and you can respond accordingly. And we've not only educated lawmakers directly on Bitcoin, but we've actually written language on pro-Bitcoin legislation that is in state and national houses and senates today. Now, our ultimate goal is to build a grassroots coalition of plebs all across the country who will use their voices to fight for Bitcoin. But still, we can't do this work alone. And that brings us to one of BAP's most important functions, which is working with and financially supporting other organizations in the space. Now, we're proud to announce that we work with all of the amazing organizations on the screen here, and each of these groups is doing incredible work for Bitcoin in the US. But I want to highlight two areas where Bitcoin is currently falling behind in Washington: education and elections. Now, starting with education, many of the concerns about Bitcoin are based in misinformation, not facts. So with myths driving the conversation, it's no surprise that efforts to ban proof of work, restrict self-custody, and overregulate the network are at all-time highs. We need more high-quality information and research on Bitcoin. So that's why we're proud to announce that we've awarded our flagship Nakamoto grant to the Bitcoin Policy Institute, the world's first Bitcoin think tank aimed at delivering research on the economic, environmental, and strategic benefits of a flourishing Bitcoin industry in the United States to journalists, lawmakers, and the public. Now, this organization embodies Bitcoin, not crypto. And I'm here to tell you, BPI is arguably the most important organization in Bitcoin politics today. So please consider financially supporting this organization so that we can avoid losing the information war. Now, in the 3 months since we provided seed funding to this organization to get them off the ground, their team of fellows have been nothing short of extraordinary. They've released a first-of-its-kind white paper on national security. They have submitted statements for the record at multiple congressional hearings on Bitcoin, and they've had thoughtful, objective, and accurate Bitcoin content placed in dozens of mainstream media outlets. This is unprecedented. In case you haven't been checking out the mainstream media, most of the coverage is not that positive. BPI is changing that. Now, the other area where we can fight back is elections. Now, lawmaker education is great, don't get me wrong, but as you all know, it's really hard to teach an old dog new tricks. Sometimes it's easier just to get a new dog. All right, and that's why we've helped support the creation, development, and funding of the Financial Freedom PAC, the world's first Bitcoin super PAC that aims to elect pro-Bitcoin candidates and vote out anti-Bitcoin politicians like Brad Sherman and Elizabeth Warren who want to ban Bitcoin in the United States. Now, the Bitcoin Advocacy Project has pledged $100,000 to get the Financial Freedom PAC off the ground, and we've secured another $500,000 in verbal commitments to this organization in the last week since this organization was filed. Now, the fight for Bitcoin will be a marathon, not a sprint. Okay, and true to Bitcoin's ethos, this organization will operate with a low time preference, all right, focusing entirely on high-impact expenditures. Every dollar that is not spent will stay on Bitcoin, or in Bitcoin on the PAC's balance sheet. Whatever we do will give us more purchasing power in the future. So this is the first political organization in history whose power will scale directly with Bitcoins. Now, our goal in the coming years is to bring an orange wave about Washington, and soon enough, that orange wave is going to turn into an orange tsunami, all right? And soon that tsunami will completely envelop the United States in an orange revolution. But in order to make this a reality, all I ask is that you support these organizations I highlighted in any way you can. And that doesn't mean money, necessarily. It means if you're a pleb, reach out and see if you can volunteer. If you're a whale, see if you can support the incredible work of the Bitcoin Policy Institute and the Financial Freedom Pack. If you run a Bitcoin company, reach out to me and see how we can work together to educate lawmakers and people in DC and orange pill folks around the country. And if you don't want to get involved in any of this, that's great too. Go do something else in the community that moves the needle forward. Because that's what this is all about. I'm not here to tell you what you should do. I'm here to be a vessel for all the things that we can do politically in the United States. And if we work together, I believe that Bitcoiners can eventually become the most powerful political force, not just in the United States, but in the world. So Washington, this is your wake-up call. Bitcoin's here. Get with it or get out of the way. Thank you.
Welcome back to the Marathon News Desk, hosted by Bitcoin Magazine here at Bitcoin 2022. I am your host, Q Gahimi, host of Bitcoin Magazine Live. I am joined by my guests, Pete Rizzo, Guy Swan, and Dr. Wolf. We've just heard an incredible talk and conversation around movements towards regulation and helping politicians actually learn what the hell Bitcoin is and how they can try to help us push this technology forward. I'd love to just ask our panelists right now, where do you think regulation and Bitcoin fit in together? If they do it all. Pete, we'll start with you.
Well, look, there's a lot of activity in the United States right now. It's great to see people energized. Myself recently contributed to the book Bitcoin and the American Dream. You can actually find it here at the conference. It's great to see people engaged. This is another way that Bitcoiners are making themselves heard, right? We had a panel earlier this week on the infrastructure bill. We'll hear from Cynthia Lummis today about what's going on in Washington. But look, I think the best thing that people can do right now is stay involved, right? Get active, reach out to your congressperson, and raise awareness because I think the Bitcoin voter is emerging. It's clear that we have demands, and I think it remains to be seen whether the politicians can actually deliver on those demands. I think that's what's important.
You bring up an excellent point. We've seen politicians make a lot of promises across the spectrum of anything that essentially drives votes. Why now? Why should we start to believe and buy politicians and what their stance is? I'm going to ask Guy to comment on that.
Oof, why now? I'm a little bit jaded with the whole situation. I kind of think wasting too many resources in this way is a little bit playing defensive rather than aggressive. And, there's always some place for it. It's not as if it's entirely wasted work, but I have such low respect and opinion for our political apparatus that I can't imagine we're doing anything but like kind of spinning on the hamster wheel, hoping that we'll get something out of it when we're building something that's truly global, censorship resistant, and frictionless in the jurisdictional way. It doesn't know about borders.
And
so
can I add something there? And we've gone from a zero, like Bitcoin when it was issued was worth nothing, right? The industry now almost $1 trillion asset. All of this has happened really despite anything that has happened in Washington, right? We've seen regulation in Washington. And I would actually even counter that there is no regulation, right? There is regulation, right? We just don't like it, right? And I think that's where this activity, interest, in changing it comes from.
Dr. Wolf, we're talking a lot as three Americans here about the American perspective on this. Would love your take on just sort of what you're seeing out of Europe. We've seen a lot of conversation around the proof of work, proof of stake argument. We saw recently some conversation around a maximum amount of money being sent around over the blockchains. Would love your thoughts on sort of regulations on the European side of things right now.
Yeah, absolutely. And you're absolutely right, Pete. Like, it's regulated already in the United States to a large extent. And you need that to some extent to also make like investors to be like comfortable to invest in that asset. Now it's about like Lightning and like all of the layer 2, 3 and other applications, which are also more complicated. But it can go horribly wrong, like really horribly wrong. Right now, April, this month, like the European Union wants to regulate any transaction on any kind of cryptocurrency. It's not only Bitcoin. So they make no distinction between Bitcoin and all of the other stuff that's out there, which is like completely
They do on the proof of work mining. They actually
they want to attack that.
Yeah, they
want
draw
to
a line
attack
there.
that. But like the bigger problem is like, yes, you can try to shut that down, which is awful, right? But they also want to like AML, KYC, every single transaction. You have to give data, like who am I to send like $10, 10 euros to somebody else? And I have to tell them, I'm sending it to you, Q. I have to give your data as well. That is just insane. And they're saying it's against like anti-money laundering. But we know like that the big banks are doing the worst, and it's not happening on Bitcoin.
You bring up an excellent point, and it's about the data. We are having that conversation right now with big tech, having collected so much data from all of us, all of you watching at home, even if you're not in Bitcoin, if you're on Facebook, I'm sorry, but Zuck has been selling your data for years now. We are having that conversation now. We are learning the pitfalls of giving away that much data and information. And yet at the same time, we're having these KYC conversations within Bitcoin about having our data now shared in a new medium and a new capacity. Talk to us a little bit, Guy, about your thoughts. What are the mistakes being made and what would you like to see change there?
You mean on the regulatory
KYC
side?
data sharing.
Well, just the very idea of someone demanding that they know why I want to use my money, like kind of like is the gall, the arrogance of demanding that is painful to me. But I think, and you know what's actually funny is Jack Mallers' announcement from yesterday. I think people discount how, you know, one of the best things about Lightning is that the sender has the best privacy. There's lots of different avenues where privacy isn't perfect on Lightning, but the sender has the best privacy. So the ability for me to go into a store without giving them my information, without telling them who I am, and buy something directly with Bitcoin makes Bitcoin cash, again, digital cash. And I think being able to use it is a great way to actually foster that circular economy where we're using it with each other, because I can go get groceries with it later. And I think that's going to kind of make this transitional KYC everything phase look more and more redundant and wasteful. And I hope the pressures put us on the other side of
Give me a hit of that hopium, Guy. I hope you are right, man. Thank you guys for tuning in. We are at the Marathon Live Desk, Marathon News Desk, hosted by Bitcoin Magazine, Bitcoin 2022, 100K by conference day. Help me convince Pete Rizzo.
Still in play?
Still in play. Help me convince Pete Rizzo. I know what I'm
baby.
doing. Smash that subscribe button over on YouTube, Rumble. Give us a Rumble. Give us a follow over there, Twitch. Thank you so much for tuning in, guys. We appreciate everyone who helped us get our channels back, everyone who is tuning in. Stick around. We have an incredible announcement coming up and more incredible guests joining us here on the news desk.
Call your senators.
Gentlemen, how y'all doing right now? You having a good day? Cool. Well, before I bring up the next speaker, I have a few questions for you. You know, first, I don't want to make assumptions, but I know we're all here because we love and value Bitcoin. Is that correct? Cool. Well, then, is it too far-fetched to say that what we love and value even more than Bitcoin is what Bitcoin gives us? Freedom. Is that true? Right on. So with that said, a couple questions for you, because we seem to all be on the same page. Not too many communists in the room, apparently. Yay. So my question, first off, have you seen the movie Braveheart? Yeah, most of you. I played William Wallace. I did not. So next question, I'm curious. Do you have a phobia? Are you controlled by fear about getting a little weird? Or do you have the courage to get weird? Which one is it for you? Raise your hand if you have the courage to get weird. Cool. Well then, here's what I'm going to ask you to do. Everybody on your feet, unless you identify as someone who, like, I don't stand. Everybody on your feet. We're going to get weird for just a few seconds. So you've seen Braveheart. You love freedom. And you know on Braveheart, they do their freedom cry. And I think at the end of the day, that's really what we're all here for, is it not? So on 3, I'm going to ask you to join me in giving your loudest freedom cry, loud enough that we crack the foundations of this building. Is that okay with y'all? We're going to get weird. It's okay. People are judging you. but you can judge them back. Y'all ready? 1, 2, 3. Freedom! Again, freedom! One more time, freedom! Hell yeah, I love y'all. Without further ado, I want to bring up the next speaker, founder and CEO of Curve, Mr. Shahar Bialik.
Hi everyone, my name is Shahar Bialik and I'm really excited to be here today. For many aspects, I've been waiting for this moment for over 5 years, and it's extremely insane to see what happened with our community and how it evolved. I'm here to speak with you about today on how we as a community can come together to free our money by getting Bitcoin to the masses. But before we begin, we have to look back 20, 30 years ago to understand how we got to where we are today. 30 years ago, our parents' financial lives were very simple. They had only one bank, one branch, and one account manager. They sourced all their financial products and services from that single branch. But we now know that simple isn't always better. We now know that banks took advantage of our parents and sold them the products that they wanted to sell them, products that made their profits higher and not necessarily made our customers and our parents better. So what has changed? Well, as markets and technology evolved, a host of new entrants has been introduced to the market, and we signed up to them en masse. And as we signed up to those products en masse in the past 10 years, our life became even more complex and more chaotic and more disconnected. So how do we solve this problem? Well, Bitcoin standard answers many of the questions. But for Bitcoin to become really adopting and solving the problem, we have to go and be able to bring it everywhere in the world. Because we as customers, we constantly crave more control, more simplicity, and more convenience. In order for us to bring Bitcoin to the masses, we have to solve two problems. We have to understand how markets operate and how the financial ecosystem works, because then we can hijack those systems and enable us to leverage them and bring Bitcoin to the masses. Specifically, we need to ensure that we understand how market operates and how the financial ecosystem works. So let's look at the first problem, how markets operate. Jim Bergsdale Let me explain that. I like to take music as an example because many of us have experienced music. Many of us have seen the evolution from a CD to MP3 to eventually Spotify and playlists. Back in the time, the control about the content we listen were held by 3 specific incumbents: Universal Music, Warner Music, and Sony Music. Back then, in order for them to distribute the content, the available technology they had were CDs. They had to go and print a CD, put it in consignment at the store, and waiting for someone to pick it up and pay $15, $20 per album, even if they just wanted to listen to one great song. It also meant that on the production side, as the value chain required them to operate scouts that are able to go and find remarkable talent, like Prince and Depeche Mode, talents that can produce not one song, but 10 or 15 songs, not one album, but 3, 4, 5 albums. Because the cost is so high, I would not pay $15 for one song. They were the gatekeepers of our society. The thread in society of music was gatekeeping by the executive at Sony Music. Then, new technology emerged, and with that, the new format of MP3. And that is the mark of the beginning of the unbundling of the market. New entrants like Pandora in the US, Deezer in France, eventually Spotify came and offered a streaming service where the customer is back at the control. However, on the production side, the content was still the same very content owned by the gatekeepers from the old incumbent world. Then the market continued to evolve. An unbundled market is a very inefficient market, and markets by definition try to become efficient. So the rebundling begins, category king emerge. Spotify won the game. And over time, Spotify started to move down to production, changing the ecosystem, allowing and enabling us customers to discover new content, podcasts, and artists, no longer gatekeeping our society. Every one of us could go and identify any new artists simply by the personalization item of Spotify. Let's see if the same applies in banking. Let's go quicker through that. The distribution technology enabled by the banks back in the time were a very expensive one. Physical branches. That meant that there was no personalization and the cost of real estate and people was very high. The banks sold our parents the products that they've created on their ecosystem and took advantage of the only distribution channels our parents had. Then technology came forward and markets evolved. The iPhone and the internet, a host of new entrants in thousands in the past 10 years, offering better, faster, cheaper financial products and services. Products that still are using the same incumbent production side. And a good example for that is TransferWise. TransferWise is offering better effects. Up until recently, have still used RBS and Barclays behind the scenes. They were restricted with their innovation because of the current existing ecosystem. Which brings us to the inevitability. Eventually, the market will rebundle, and category kings will emerge, and will change the entire ecosystem from the ground up, because they have reached mass adoption before the incumbents have achieved innovation.